Ladies and gentlemen, welcome to the CoreWeave live stream, aftermarket live stream. We are going to be watching stocks going into the close, okay? And we'll be joined by Jose. However, he might be a couple minutes or something. But we'll be listening to CoreWeave's earnings. We're also going to be following Coinbase, Iren. There he is. How you doing, brother?
What's going on? Good afternoon. How's everything?
Doing awesome. I'm just seeing which stocks that we have to cover today. So why don't we go through the list?
Mm-hmm.
We have CoreWeave, of course. Oops, sorry, I spelled that wrong. We've got CoreWeave, Iren, Coinbase, Rocket Lab, SoundHound. Which other ones are you looking at?
Not that. Let's see. There's a small AI company called InnoData. I don't.
Yeah.
Just curious to see how they do. Let's see what else I'm looking here in the calendar. You got SoundHound already, right?
Yes, I got SoundHound. I'm still plugging away. There's so many companies today.
Yeah, Indie Semiconductors, another semiconductor play, super small in like the automotive space. I don't know if they're transforming or moving into anything AI or data center.
We got SMR as well today.
Yeah, there's ACLS, Axelis Technologies, which is, I think they do equipment. I don't know all the semiconductor companies, but I think they do equipment for the manufacturing process. And I think they might be crucial for like the memory play.
Say that one more time. What's the ticker?
ACLS.
Oh, I see it here. Okay, yeah.
What else do we have? I don't know if you have. Did I say Mercado Libre? I know it's not in the semiconductor space,
Yeah,
but I know a lot of people follow that one.
I own that one. It's in the portfolio.
Let's see what else. Wait, there's things to own upside chips and AI.
Paul Tudor Jones just said today that there might not be. He's just buying AI stocks.
Really?
Yeah. Yeah, he said he's still doubling down. There might be a year or two left in a massive run, is what he said. But he said it's 1999, and there's still a lot of room to go.
There's also another super. First, I hope he's right. I hope we got a lot of room left to grow. I do think so. There's a super small AI company that I'm following. Is ticker ASYS. They report earnings. And these create kind of a manufacturing. It's a 200 market cap company, 200, 300.
Yeah.
So it's in the equipment space. Not much volume, so maybe we can ignore that one if anything. It seems like there's not much volume this one, but we have a lot. It seems so. Even
we
if
have
we don't.
a lot. Like whenever I have to scroll down, and just on the that I'm using, they only cover, I think, 7 more companies in the recents before it starts deleting them. Like we've got a lot here. CoreWeave, Iren, Coinbase. I see a couple people. Cloudflare is there.
Net is doing today. Okay.
Yeah, we got MP Materials, AOI, a bunch of those ones. SoundHound, I'm pretty sure I got up there, right? SoundHound. And it should be an exciting one, brother. I'm excited. JFrog is tonight as well. Let me put that up.
What are you excited about here, Tanner?
Well, Mercado Libre, I think, is the only one that I have like an actual financial stake in. CoreWeave, obviously, is I'm even more excited just because the commentary that they can say around Nvidia and how customers are really looking for more, supply from them, and they're essentially a showcase for Nvidia products. I think is very exciting. I think the call is always good. Iren's going to be super interesting. Really like the commentary that we get from the trade desk and Cloudflare. I don't have stakes in these companies. I think the trade desk, Jeff Green, is probably one of the smartest people in the entire AI or in the entire advertising space. So really excited about that one, just to hear his commentary. And Cloudflare, obviously, going to be a big one for the AI names in general. And yeah.
Yeah, same. I think the only one that I own out of this list that I can, I mean, I own some of them very small, like InnoData, I have a small position. Amtech, I own a position as well. But the biggest one for me is CoreWeave. It's like it's a top three play on my portfolio. Um, but even though it's a top three play tenor, I actually don't know what I'm like. It's weird. I don't care what the results are in forms of like revenue and stuff like that. It's more just the story. I don't even know what the analysts are expecting on this one, right? I really don't know. I'm expecting at least I guess a gigawatt over of active power, and more just the commentary because from everything we've been looking at, right? It's just the demand is there. It's just can you build up these data centers? So it's more about the story than anything else, and is that story still um, going on?
Yeah, yeah. So you don't have an exact revenue or EPS projection just yet.
Nope, not for this one. Like I mentioned, I don't even know what analysts are expecting here. I just know last quarter they had about 800 and something of active power.
Hmm.
I'm hoping this quarter we get over a gigawatt of active power, and then just any commentary of how quickly they can continue to add that active power. I think would be crucial. Maybe we heard that they were going to start a CPU standalone. I don't know if it was going to be data center or a portion of a data center. Um, when is that going to go up? Especially right now with this craze on the CPU story. So when do they plan on putting some of those systems up? And I think the third thing I would really focus about Tenor is they announced the Anthropic news, but we didn't get like a monetary value out of it. It was
Right,
just
right.
we have a long term partnership. So any color or commentary on that Anthropic, because we know Anthropic like it's making deals with anybody, even XAI, right?
Well, let me ask you a question about how those deals can even be written. So I think there's a sort of a mix between, well, obviously Anthropic is growing super fast. And if they're looking for a really high quality, provider for their compute, CoreWeave is rated right there at the top, right? But because there's such high demand, there's also a limiting factor of, hey, we need to actually be able to set this up while also, you know, um, being able to fulfill our past commitments. So how much can they continue to add on in terms of demand from a customer as large as Anthropic?
And I think that's why they don't want to share the monetary value because at the end of the day, it's all going to play out on how much data center they can actually build out,
Hmm.
right? And
So
I'm
you think
curious.
it's flexible?
Yes, I think it's flexible. I think these companies do have like a baseline of, hey, look, by the end of this year, I can give you this much because I know that's how much I'm going to build up. But I think there's flexibility of how much they can also add onto it because maybe some of these data center parts come out a lot earlier than expected. Maybe certain regulation things come out a lot earlier than expected. So I think it's extremely flexible on it. What I would be curious, and I don't think they share much, is more the pricing. Now with we see prices of H100, of B200s, of all these chips kind of going up.
Hmm.
Um, how are these prices happening for especially a lot of these companies that tend to do kind of like those long term contracts? Um,
I
so
also
so
I
yeah.
read something recently. I don't know if you've been seeing similar things. I think it was from AlphaSense that CoreWeave is charging quite a premium on the GPU rental prices. So whenever you compare to some of the neo clouds, whenever comparing neo clouds to CoreWeave specifically, that they're definitely on the higher end of rental prices.
Yeah, I mean, and that's one of the things I enjoy about CoreWeave, right? And they talked about it in the past. One of the biggest issues with AI data centers is not just having the GPUs, but making sure the utilization of those GPUs are running very effectively and efficiently. And CoreWeave, they mentioned like a H100 or Blackwell chip on them. It's different than in other place because if in other place you're only getting like 80% utilization due to chips going down or something, but CoreWeave can give it to you at 95%. You're always 95% is always running. You get to charge that extra premium. Um, so as a lot of these neo clouds evolve, right, that can change as they kind of get that software stack level between the bare metal and the user gets a lot better. That might not become always, but at least for now, it's one of the reasons they're able to have premium pricing on some of these GPUs because the utilization is a lot better than anybody else.
Parsival in chat saying that they're
That is wild.
yeah, the market's currently expecting a 15% move either way after earnings. What's pointing to the options market, and Parsival is a very big CoreWeave shareholder in chat, so he's with you on this trade, and hopefully, he'll probably be holding through regardless.
Same mentality as him. He mentions if CoreWeave dips to 100, I'll just buy more. I think I'm in the same boat here. Even though we just got under 100, but I enjoy this company a lot as long as the story, and I don't think it's going to change. What we heard from all the big players is the story's here to stay for a while.
I mean, if it dips to 100, I might even buy some CoreWeave too. Maybe I need some diversification because I'm not buying Nebius here, but I still there's still
that was ripping, right?
Well, we almost broke 200 today. I don't know if it's still going up. I think we retraced a little bit. Yeah, 184,
Insane.
But we hit a new all-time high today, 197.89 at one point.
You know, this is one of the things that I hate about being like covering stocks. Just because I like one, the
You hate this
community, yeah, thinks I hate this one, right? It's like, no, I hope you guys do well too, right? It's like, if I like one, it automatically means I need a bad mouth the other one. But I hope everybody's gaining money today.
There was a very large executive at Nebius that tweeted out today that they hope Elon reaches out to them to potentially help with the SpaceX deal, so then they're not just selling to one customer, but they're selling to a bunch of customers, even though I think the customer that they're selling to is so large that you kind of can be you don't need to sell to a bunch of customers. Do you ever think that something like that could potentially happen where CoreWeave or Nebius end up partnering with other companies because they're not just selling bare metal, there's also, software to go with this, and so they could partner with some of these other companies that have set up GPUs before?
Yeah. So last quarter, I don't know if it was during the earnings or somewhere in between today and the last earnings report, the CEO mentioned that one of the things they're actually looking to doing right now is just selling the software itself and kind of licensing it to other players. So he mentions that maybe not this year, but next year, he believes is going to be a nice portion of overall revenue. He's being a little bit conservative for this year, but that's one of the moves that they're going. And like you mentioned, right, Tanner, is they do have a premium because the utilizations are a bit higher. So if they can sell that, I don't know why they wouldn't want to keep it. Maybe that speaks a little bit of maybe there's a catching up with competition. But if they're willing to sell that, I think companies like XAI or other players may say, hey, look, maybe I don't need your compute, but I do need that software stack solution that you're putting between the users. Right. So it definitely seems like it's moving. I think the way CoreWeave and Nebius, I know Nebius has a lot more Nebius, I'm not sure what the correct way is. It has more of a stronger software stack because they're definitely trying to become kind of like a true cloud player. So they have a lot more solutions in that space. I don't follow that one closely enough to know if they're trying to do something like that as well.
See, if you listen to the earnings calls, they call it Nebius. But if you listen to Jensen, he calls it Nebius. So it really, I don't know. Maybe Jensen will change the pronunciation.
Yeah. You don't correct them, right?
Yeah.
Guess everybody at Nebius is like, I guess we're Nebius now.
Yeah, I even heard a Mitt recently. I was listening to a stream and he goes, well, if they can grow their revenues, and he keeps pluralizing revenues. And I'm like, that's a Jensen thing. You've been listening to too much Jensen. But he's such a powerful man. He changes the way people use the English language. But that being said, we are about to go into the close here in 30 seconds. Both CoreWeave and IREN are down almost 7% today, after ripping pretty well over the last few weeks or even months. And so, the prices are still pretty good on CoreWeave and IREN. IREN was in the $40 ranges for quite a little bit there, now going into earnings at $56.76. But me and Jose will be trying to get the numbers out as fast as possible for all of these numbers. And then, of course, whenever it comes to the actual technicals, Jose is going to handle that. But the market is now closed, and we'll keep an eye on all these names. Guys, let us know in the chat what you are betting on to see if we can track that for you. TTD immediately up 1.4%. I don't know if that's just earnings jitters or not.
It's so crazy. It looks like you're looking at the whole market here, but it's just the watch list of today's earnings.
Yeah, this, from here up is all earnings. It's nuts. Okay, let's see if we get anything early. And best of luck to you, by the way. I've got Mercado Libre, but
Thank you. Best of luck to you too, and best of luck to everybody. Right, and
they've been not doing so well, Mercado Libre, on earnings. The reaction to their earnings in the past couple of quarters has been quite sour, even though that they've just been continuously growing. So I'm curious to know if that potentially flips around this time.
yeah, and the chat seems like we do have a lot of Iran. Is it Iran or Iran? I don't know.
I say Iran. It's Iris
Iran.
Energy.
Iris, right? That's the name it used to be, right?
Yeah.
I think they we got some people SoundHound. It's definitely a nice kind of AI high growth names. ACLS is down 8% already. Okay, let me see.
ACLS down 8.9%. AAOI, this is a photonics name, I'm pretty sure down, or sorry, up 1.2% after being down 12% today. Oh my gosh, Airbnb up 4.5%. Let's see if we're getting any numbers here. We have Serve Robotics. I didn't even put them in the list.
Oh, Serve Robotics is reporting. Okay. I know by the end of this year, they were expected to have, I think, 1 million, not 1 million, 1,000 robots by the end of this year. Well, what's that last quarter? Did they hit their numbers?
They missed on revenue by 2%. And they missed on EPS by 5%. Revenue came in at just under $3 million, but still revenue is up 577% year over year. Obviously starting from an extremely low base. So
Trade Desk just reported numbers are out. Revenue 689 versus 679 that was estimated. So a beat of about 10 million there. Adjusted earnings per share 28 versus 32 cents. So they missed on up on revenue, down on adjusted earnings per share.
The Trade Desk, if we look back on the last year, even further, actually, just slightly out of the 1 year mark, this company used to be at $141 a share. And now in the after hours, it's potentially headed for under $20. We're about to fall into the teens.
That's good.
Yeah, we're in the teens right now. That's unreal. This is what scares me about ad tech, because I worry, like, you know, Zeta's such a hot stock right now, AppLovin's such a hot stock, but how do you know if they're not just going to eventually come out and then all of a sudden you're a darling on Wall Street and then people no longer want to use your app?
Yeah. And I mean, this one would be interesting to see. I don't follow this one too much, Tanner, but I would love to see what the turnaround of this was. Like you mentioned, this was like a retail darling for a while, right? I used to kind of hear all the time about Trade Desk being a great company.
Wall Street loved the company.
Yeah, it was CEO founded still, right? I think, or no?
Yes, yeah, Jeff Green, and he just put up one of the biggest insider purchases. He bought like $140 million of the stock like last quarter. SoundHound just released earnings. They missed on EPS by 1 cent, which was a 10% miss, and EPS beat by 4%. Revenue is up 52% year over year, and the stock is trying to figure out which way to go. At one point, it was red, but it looks like it might be recovering here. Okay. Wynn Resorts did a double beat. Mercado Libre beat revenue by 6%. Revenue is up 49% year over year. Wow.
Holy crap. That's crazy.
Wow.
They start selling tokens or something?
Yeah, maybe, right? EPS, it missed by 3%, $8.23 versus $8.47 expected. So Mercado Libre, once again, they just continue to grow, continue to beat on revenue, and the market does not seem to care. Airbnb beat on revenue by 2% and missed on EPS by 16%. Last time we looked, I think that name was up. I used to hold Airbnb. I used to be a big fan of Brian Chesky and the team. Sort of a N of one company. Nothing. They weren't really competing with anyone, but the stock was not moving for a long time. So it was a little bit of opportunity cost, and they're still showing that roughly hovering in that $130 range.
Yeah, I feel like every time I look at Airbnb, it's within that like one something and $200 range.
Yeah.
The company I was following, Amtech, just reported it's ASYS. Let's see, I just have the numbers here. Super small company, but they did beat on revenue. Revenue was expected 19.5. They did about 1 million more. Earnings per share was also beat by about a cent. I think the stock was up a little bit after that. And up about 7% right now.
Rocket Lab, I don't have the numbers here, but that stock is headed up. Iren's up 3%, and CoreWeave is also up 1.2%. I don't have the numbers yet on these companies.
Yeah, I haven't seen any of the numbers.
Oh, sorry, dude. Revenue beat by 20%. Revenue's up 49% year over year. And EPS beat by 175%. EPS is up 125% year over year. That stock is up 4%.
The United States invested in MP Materials, right? Did they?
Yes.
I think they're right.
I think that's the same one we're thinking about. It was that or Lithium Americas, or maybe even both. Open Door came out revenue beat by 8%. EPS missed by 80%. No, actually, the numbers look a little bit wrong there. They came in, EPS was supposed to be negative 18 or negative 10 cents, and they got negative 18 cents. Is that not a 40? I'm going to sound dumb. I think I'm wrong.
What numbers are we talking about?
Open Door here, they missed on revenue by 80%, and they beat on, they missed on EPS by 80%. They beat on revenue by 8%, but yet still revenue is down 38% year over year, and EPS is down 50% year over year. So they've got a long way to go to turn around that business. CoreWeave numbers are out.
Are they?
Revenue is beat by 5%, right? Over $2 billion. Mm-hmm. Revenue's up 112% year over year, and EPS is up 6% year over year. However, that was a large miss. And Wall Street was expecting negative $1.20, and they got negative $1.40. But the Wall Street does not care about EPS on these neoclouds. It's all about revenue and growth.
Yeah. I'm gonna start doing some research on those numbers really quick, Tanner, where you keep looking.
Please do.
Yeah.
Toast, I'm only having the top and bottom lines of this company right here. It looks like they were in line on EPS and a beat. In line on revenue and a beat on EPS. And the stock is now down 8.2%, a stark change from their biggest competitor, Shift 4, that reported today as well in the morning. And that stock went up, over 10%. So this is having quite the opposite reaction.
Yeah. A quick number here on CoreWeave, Tanner. They now have a revenue backlog reaching nearly $100 billion, and they surpassed 1 gigawatt of active power. And their goal is 8 gigawatts by 2030. But 1 gigawatt finally passed, and close to $100 billion here in backlog.
Dude, $100 billion of backlog. That's like where Google was 2 quarters ago. InnoData, by the way, beat revenue by 18%, up 54% year over year, and they beat on EPS by 425%. Wall Street was expecting 8 cents of EPS. They put up 42 cents. EPS is up 91% year over year. That stock is up 14% right now.
Nice. InnoData doing good. It seems like we talked about, right? The AAOI, was down right now after hours. The crazy thing is all these could change especially for the AI story. If they kind of give us some crazy stuff during the earnings call, a lot of this can make that U-turn.
Oh, yeah. Yeah. It still is crazy watching these companies, though. Like the volatility of some of these names, especially the photonics names. And, a lot of people were betting on these companies because there were signs that there were massive bottlenecks here for co-package optics. And the stock fell 12% during the day and now another 12% in the after hours. That's a pretty big haircut. Block, where's Block? This is Jack Dorsey's company. Double beat on revenue, beat on EPS by 25%. We saw it in the website traffic. There was a lot more traffic to Block, and I said I was not nearly as bearish as I was before. However, this company has had a pretty rough last little bit. But now they're showing some decent growth here, 85 cents of EPS. Okay, JFrog is up 20%. I don't have the numbers here, but they are definitely going to be competing for one of the bigger movers of the day. Where's Iren? Where is Iren? Iren and CoreWeave flat right now.
I don't know if Iren does it. I know CoreWeave shares most of its guidance and like capex numbers at the call, right? Which kind of sucks. So even though we have some of the numbers, we won't get the full picture later on. But Iren, a nice double beat there.
I don't know if this is true, but EPS $1.08 versus 15 cents expected. And we're red right now. I think once again, people don't really care about the EPS in the short term for these names because the guidance for some of these neoclouds are so much larger than their current business.
Yeah, I'm gonna start looking for some of these numbers really quickly. I haven't seen Iren's numbers just yet.
CoreWeave now down 3.5%.
Oh no.
Hey, if I can get in, honestly, I'm not here to bet against you, Jose, but if this gets below $100 and I join you, I mean, for next quarter, it'll be a lot more exciting when we're both in on the same names.
That's true. That's true. All right. A quick dip to let Tanner and some people buy, and then let's have to turn around.
You can't wait 3 months to to let us have a better time together. Most times, whenever me and you buy the same names, those have done well. I can't think of many names, but Nvidia is the biggest company in the world.
That's all the data we need.
Yeah, seems to work out. InnoData down 14.4%, and AAOI is, InnoData is up 15. AAOI is down 12%, maybe starting to recover. Got a little bit ahead of myself there.
So yeah, I'm just curious to see if I still own that one. No, I don't.
Monster putting up 4% growth. Fun fact, this is like one of the best companies ever to have purchased by the time that they were public to now. I think it's the #1 compounder of wealth. If you were to have purchased whenever they went public in December of 2026 or around that, you'd be up roughly 555,000%.
That's wild. December of when?
1996.
Not bad. If only 4-year-old me would be investing at that time.
Well, blame your parents.
Yeah. Darn them.
You didn't see Monster Beverage? Come on. Okay. Let's see here. Toast is now down roughly 10%. Open Door flat on the day. Dropbox up about 4%. Airbnb flipped to red, down 2.8%. So staying in that $130 range. Mercado Libre doing what it always does. Poor on earnings, but somehow makes a lot of its growth back during the 3 months in between. SoundHound down 14%. Are you in this name?
No, I'm not a fan of AI audio just yet.
To me, I just never understood why Anthropic or OpenAI can't just do this.
Yeah, I think that's my biggest pain with audio. I don't know how much a moat there is in audio just yet.
Dude, the Trade Desk down 17%. Serve Robotics up 3.4%. JFrog up 14%. Expedia down 7%. That's not like them. I'm pretty sure in the last couple of earnings that we've seen, they've actually skyrocketed on earnings.
Have Iran's numbers really come out? I'm trying to go to their website and I haven't gotten anything.
I'll check a couple places here. I don't have their numbers either.
Right. Okay. Because that was pretty flat right now. And I don't, maybe they come out in a few minutes.
Okay. All right, I'll keep looking. Maybe we're waiting for their numbers.
Was Unity also reporting today? Did it report already? Unity software.
We May 7th in the morning.
Oh, okay. So it reported earlier. Okay. Never mind.
Unity was down 2% today. Okay.
Yeah, I mean, from CoreWeave, I don't think there's much we can see from their report. I mean, a lot of the stuff we knew, they got the $21 billion commitment from Meta that signed in March. They again talked about the Anthropic multi-year, but no numbers still. Hopefully, we get something during the call. Then they talked about random companies that are also using them: Cohere, Lane Street, Jane Street, Mistral, Perplexity. World Labs, I don't know those. And then they talked that they finally got the money from Nvidia for the $2 billion investment. So that closed. Nvidia's $22 billion class stock investment closed this quarter. So they got an extra cash in their balance sheet.
Really weird numbers here from Cloudflare. They just destroyed earnings, up 3% on revenue. Well, up 34% year over year. But beat on revenue, beat on EPS, stock is down 11%. So there must be some piece of news there that people do not like. We can get a little bit more information here in a bit, but the first numbers that I see are the top and bottom lines. Then we can get a little bit more of a breakdown.
The crazy thing is this one, just in the past 5 days, was up 23%. Even after this drop, you're still above where you were in May 1st. So I know there's been a lot of excitement with this one, with the agentic AI push. Because like every agentic AI needs to go through the web or something like that, and they control about 30% of the web, and the usage case is becoming an opportunity here.
I'm a customer of Cloudflare. They host one of my websites.
Same.
Yep. So they should be going up. Here's a little quote from CoreWeave. As the market moves from training to inference, that distinction matters more than ever. CoreWeave was built for exactly this. We've surpassed 1 gigawatt of active power, and we believe we are on our way to more than 8 gigawatts by 2030. Pretty sure that was the original goal for OpenAI as well, was 8 gigawatts of power by 2030. And now I think they just said that their new goal is 30 gigawatts. But
that is crazy. That is crazy.
Yeah.
I mean, for people investing in power plays, I mean, you can definitely get excited from hearing things like that, right?
Let's see what else. DraftKings was a double beat, small beat on revenue, big 18+% beat on EPS. 20 cents is what they got. They were expecting 17 cents. EPS is up 67% year over year. That stock is up 4% in the after hours. SMR. Whoa. Where is SMR? SMR was expecting $5.5 million in revenue. Instead, they got $500,000. A miss of 90%. Really small numbers still. So like that could be a single contract, a single customer, something that got delayed by 3 months. Who knows?
How long has it been where, completely off topic, but I'm seeing on X that now when you put the ticker, you kind of actually get the chart underneath. Have I just been gone for so long?
No, that was today.
Oh, okay, today. I'm like, I haven't seen this.
Well, at least I noticed it for the first time today.
Right, right.
Okay. JFrog up 14%. InnoData now up 22.6%. Coinbase with a double miss, which is, I mean, probably to be expected. They're a crypto name. No one's buying this for this quarter. They're buying it for whenever the crypto market or the crypto winter is over. But that being said, Wall Street wanted $1.56 billion in revenue. They got 1.4. So they missed by 160 million. EPS, estimates came in at 29 cents. They got negative $1.49. That's a little bit rough. Let's see.
People are saying Iran's number are out. I still don't see them. Let's see. Nope, nothing yet on my.
I don't see numbers either. And Nate says that 5 p.m. is when their earnings PDF releases. Is this the potential link? I don't know.
Lyft supposedly reportedly repurchased $300 million in stock in Q1. Their market cap is like 5.5 billion. So that's a good portion that they purchased in one quarter. What the heck?
Say that again.
Lyft repurchased roughly $300 million in stock in this quarter, and their market cap is like 5.4 million. So about what, 5%?
Yeah, that's crazy.
Wait, did I do my math right there? Yeah, I think so.
That reminds me of what company was it that just bought back a ton of their stock? Oh, it's on the tip of my tongue. I'll think about it. But it was this week, and they bought back a significant portion, like 16% of their outstanding shares. It was Pinterest. That's what it was.
Oh, Pinterest. Interesting. I feel like they could just become an AI training something company, like sell data to the AI models.
What do you think about a name like Reddit for that?
Reddit too. I mean, it makes sense for what I don't know. Every time I would look for anything, I go to Reddit. But the only thing is like it's usually user based. So how can you verify it? So it'll be interesting to how the AI model will use it to train. Is it more to just train to understand what the consumer is looking at? But it's just like how the validation of the data, I think, is could be tricky there. But don't they have a business like that where they license their stuff to, I think, Google?
Yep. Yeah, they license out for AI training, but it's not a big portion of their revenue right now.
Did you call someone a weirdo, Tanner?
I don't know. That sounds like me. If you were to,
I was just looking at chat and it says, "Yeah, click it. I'm not a weirdo." That's the only thing I read.
I don't know. I've been. It's like if a cop came to you and they're like, "Did you say this?" It's like I don't
maybe.
Know. If you have the transcript, I probably did, but like, Cloudflare now down 15.8%. I know a lot of people who are looking at potentially getting a starter position in this name.
Yeah,
maybe this is opening up for people to buy.
This is a name I wouldn't mind also thinking about. I have to do more research on, but it's one like on the watch list outside of semiconductor. There are certain stocks that I wouldn't mind, and that one's on the list. Mercado Libre is down 6.7% right now.
Yeah, that's the journey of a Mercado Libre investor these days.
That's lame.
But I've got a pretty low average on this name, so we can sit pretty. But it definitely was better above 2,000, that's for sure.
I don't know what's happening here with CoreWeave. It's still moving all over the place. I think it was down like 3%. I see it down 1%. What's going on your end there?
I haven't even. I'm still waiting to see if we got all the numbers for all the companies. But if it's time, maybe we can switch over.
No. Sorry. I was mentioning price action. I was seeing it like move.
Oh, I see.
Yeah.
Down 1% right now.
Yeah, it dropped the nice, right? 121. All right. And
yeah. And Iran sitting decently flat, up 1.2, but has sort of been in that range. since the after hours. MP Materials now up 7%. InnoData now up 22%. AOI down 11. And Toast is down 10% now. Wow. And where's Trade Desk? Down 14. Dude, it is crazy. I love earnings season so much. It's unbelievable. Okay, let's go and check out CoreWeave's actual report. I don't know if you're looking at that right now.
Yeah, I'm trying to get some stuff here.
Do they have a
Yeah, let me send it
earnings
to you.
presentation?
They usually have a presentation, but they don't have any. I only saw the report right now. Let me send it your way.
You're not fast enough.
You got it.
Cloud platform purpose built for artificial intelligence delivering unmatched performance. That might be backed by true fact. They actually said, yep, I was going to say there's a little footnote here, and they did note ML perf benchmark results, Nvidia exemplar cloud status, and semi-analysis cluster max ranking.
Boom, boom. They give you the receipts.
Nebius just got the Nvidia exemplar cloud status as well.
Status. For which for the B200s or B300s? I wonder what's happening.
It was the 300s.
300s. Nice.
Yeah. Okay. Rapidly developing new generations of infrastructure at scale with unparalleled track record of being amongst the first to market. Continuing to invest up and down the technology stack to deliver a full service AI cloud platform, servicing most of the world's leading AI labs, hyperscalers, and AI enterprises. Do they have a relationship with OpenAI?
That was originally kind of like their first big customer. That's what everybody with Microsoft and then they had OpenAI. I think OpenAI has like 20 billion plus as well.
Got you. Wow. 1 gigawatt of active power, 3.5 gigawatts of contracted power. Wow. Is that also up quarter over quarter? I don't remember that being so high. Or maybe I'm comparing it to Nebius actually.
No, I think they might have added like 400 this quarter. So 3.5 I think was a bit of addition, but I think we did hear some clarity about it between the earnings calls.
6 data centers added in Q1.
That's crazy.
Flying up, yeah. Oh my. $99.4 billion revenue backlog, up 284% year over year. $6.8 billion of capital expenditures. Is that higher than expected as well?
It's going to be definitely more back half. Not really, because they had a bit of a delay issue. So we knew kind of like some of the capex was going to happen more into quarter one.
Right. Adjusted operating income.
A whopping 1% margin.
Yeah. What is the massive increase in the loss here? What was that attributed to?
I'm gonna guess it's just the kind of the delay on that data center that they were expecting. It took a lot longer than expected.
Got you. Oh, okay, so their revenue backlog goes as far as 48 months.
Yeah.
Okay.
I wonder if that. Yeah. So 36%, and most of it, I mean, obviously they can only have as much compute per, or rent out as much per year based on the compute capacity that they have.
Yeah. Okay. I want to see a little chart of their capex over time. I don't know if they have it here or not.
Just jump over to fiscal.
Yeah, that's exactly.
It's the easiest way. I mean, it's definitely gone up a nice amount because historically, I think they were doing like 2 or 3 billion.
Yeah,
or it might be confusing.
I know that their expectation for full year has gone up a lot.
Yeah, last time I remember, I think it was 30 billion. Let me just pull up my my AI really quick.
I had a member in one of my chats today said, I don't remember how to do research, or I don't remember how I did research before Fiscal AI. I was like, yeah, me neither. I don't know.
Oh man.
Like the amount of
Go ahead.
plugging on data that I used to do in spreadsheets.
This
But
recent capex been for quarterly, and what was guidance?
ASYS is now up 6.5%. Dropbox up 2.5. Yeah, still no IREN. I'm not seeing anything.
Yeah,
Yeah,
maybe they do. It's weird that they do it so late.
it was Vitzal here in chat. It was him that said that. Yeah, I'm not seeing IREN. Can't wait for IREN though. I'm really excited to see how that compares.
Man, is Cloudflare really down 20%? No, 12%. Someone in chat said maybe at one point it hit like 216.
InnoData is up 33%.
That's wild.
You said you had this name at one point?
Yeah, I had it until recently where I'm like, you know what? I'm too exposed right now. Let me underexpose. And there were some names that I didn't have like a core position. InnoData was one of them.
Yeah, so tomorrow, this is where they just closed at today. But
At
tomorrow
60.
they're expected to open around this price whenever you compare them to their last other pumps that they've had. That's going to be a big jump up. Wow.
Yeah. Oh,
Yeah.
good. Let's see. No, so last quarter, capex was 8.2 for CoreWeave. This quarter was 6.8, so a bit of a sequential decline. But the previous quarters, before quarter four, they were closer to like $2 or $3 billion.
Right.
So we're kind of now moving up to that north of the high single digits versus low single digits that used to be for this company. And guidance for the full year of 2026 is 30 to 35 billion on capex for this year. So if they're only spending about 7 billion here, if they spend another 7 billion next, it seems like it's going to be mainly second half back end for capex. And it makes sense. I mean, if they're expecting a lot of Vera Rubens, if people are just waiting out for the Vera Rubens, you do expect maybe the second half to be the heavy side of capex.
But what type of customer? This is something that I'm trying to figure out is like, how do you think about waiting for Vera Rubens or something like this? Because the average cost to run those, or at least what CoreWeave's going to charge for that, is also going to be so much higher. So how do you balance out paying $3 for H100s, $6 for B200s, or whatever the price is going to be for the Vera Rubens whenever they start going live?
Because I don't know if it's Nvidia or semi-analysis that's actually showed the charts that when you see prices increase, you see it on the actual flops. So if like, let's say the Hopper in flops is 2 times, or the Blackwell in flops is 2 times larger than Hopper, you see 2 times price increase. But what you actually see the improvement, even though the raw power is only 2 times better, the token cost or the token improvement is like you get about 35 times more tokens in the Blackwell. So even though the price increases, as long as that token per GPU increases at a much higher pace, it makes more sense for these AI companies, right? Because at the end of the day, that's what's selling. So as long as the token is growing at faster levels than the price itself, I think they don't mind paying. And we know with Vera Rubin, I think it's just going to be a whole different beast.
But is that it? Like, is that just for training simply, or because we
Mainly
just
for
saw
inference.
Anthropic?
Mhm.
We just saw Anthropic do a major deal with SpaceX to get H100s, H200s, and they essentially need all the compute that they could possibly get. Who has the flexibility to wait right now, considering it's like we're in a major race?
Yeah, so I don't think anybody has the flexibility. Like, I don't think CoreWeave is. I think these neo cloud players plan it accordingly. Like, oh, this data center 2 is going to be built at the same time with Vera Rubin. Let me just put it out. I don't think any of these data center plays have like white space available, and they're like saying, you know what? I'm not going to buy
Oh
Blackwell's
my
right now.
gosh. Sorry,
I ran up 23%.
Sorry, you
Let's
can
see.
continue. I just
No,
wanted to make sure that we
I want
just
to look
saw
at the
that.
numbers first. Yeah, I want to see the numbers first, and I can continue. But I don't think like while I'm looking at the numbers, I don't think any data center players are like have data center floor space and are waiting for Vera Rubin. I think it's like in going with the calendar of data center is going to be built out around the same time that one comes out.
I was literally like, I was looking at CoreWeave and I was like, why is this one up? And why is Nebius starting to jump up? Nebius just had a nice green candle whenever that initially shot off. I was like, something must have happened.
Iran and Nvidia announced a partnership to accelerate deployment of 5 gigawatts of AI infrastructure.
Very nice.
Now this is going to be interesting because that's crazy. That's for a lot. Curious to see what that happens with AMD because I know Iran was buying a few AMD in the past. Does that change now with this partnership? Nvidia receives the right to purchase 30 million Iran shares at $70 each.
Say that one more time.
Nvidia receives the right to purchase up to 30 million Iran shares at $70 each. Shares agreement represent potential investment of up to $2.1 billion. So it's a partnership to deploy gigawatts, but at the same time, it seems like it's an opportunity for them to buy out, to invest into Iran as well.
That was one of the critiques that I had with Iran is I was like, man, NVIDIA's handing out partnerships like crazy. Why is, Iran has not got that $2 billion deal like all the other ones have. But I don't know if $2 billion is like the amount that they can sign without Jensen approval or something like this. I don't know what it is, but you see that in Berkshire Hathaway, right? Like some of those companies that are invested in like under $5 billion, like that probably didn't even reach Warren's desk. We see so many $2 billion deals in NVIDIA that it's almost like a weird sign.
I agree. I think I think kind of one of the things with Iran with a lot of people was just like, are you just going to be bare metal? How are you going to go? I think that acquisition that they made just a few days ago was pretty good to help kind of increase their AI stack. And I think the validation of NVIDIA here, I do think it's amazing. I do think this is really good for showcasing that Iran is a true player in this space where there was a lot of questions behind that.
So we still might, I don't think this came with earnings, right? Is this a separate report or are the numbers out?
I don't know. I think that I just see that report. I haven't seen the numbers either.
Yeah, I don't have the report. This might be completely separate, which might mean good or bad things. But that's sort of been the thing for Iran, right? They've had the power. Now they just need the unbelievable chips and the expertise, I guess.
Mm-hmm. And I mean, with this that comes out, what I do think is weird, right? Is this is one of the I don't know, maybe in the other ones, and I didn't notice, but this is taking warrants, right? It's not with everybody else. I think it was almost like a purchase at the moment, but this is like, you know what? I'm getting the option to do it in the future. I still haven't decided. So I don't know if I'm nitpicking, but it is something different compared to some of the other ones, where the other ones, I think it was just a direct purchase of shares. Could this have been Iran saying, look, I don't want to sell that many. I don't need the equity right now. Let's see. I don't know. But it's definitely a bit different there.
I see what you're saying. Yeah, that is interesting, right? Most of them were not rights to purchase.
Mm-hmm. It was just a straight out investment at the time of the announcement.
Yeah, that's interesting. Because you got to look into those specifics as well. Same thing with like the OpenAI deal with Nvidia. And then you look at the OpenAI deal that they did with AMD, and it's like Nvidia got OpenAI shares.
Yeah.
OpenAI got AMD shares. Very, very different.
Yeah. That's crazy. Now, congratulations to our end shareholders. I know there's Simon. Simon is on my chat right now. He's been a huge bull of Iran, so I'm pretty happy for him. Extremely happy for him. This guy
Yeah.
Mitch says I'm mad. I don't know. I think I'm okay.
No, dude, I absolutely love this. The more customers that are buying and partnering with Nvidia, the better. The more chips that will be sold. This is better for all of the, like, just the general AI infrastructure plays. It's showing that demand's there, and Nvidia actually does not have enough with just partnering with the existing hyperscalers and the existing neo clouds. They want even more. They're willing to help them out. They want to make more sales.
I think another way to think about it is Nvidia at the end of the day doesn't want there to be I don't know how to say it. They don't want this to be overbuilt out either, right? So because if there's an overbuilt out, then you kind of hear more about this AI bubble being true.
Mm.
So if Nvidia is still going with these investments, to me it tells me we're still nowhere near the top, right? They're still putting their money where their mouth is. So I think it's a great thing about the overall ecosystem that we still just are so much compute constrained, and they're expanding in Europe.
They need to get away from Nebius. Leave Nebius to Europe. You guys can split the United States. CoreWeave flat on the day. I think Nebius was actually running on this news. It was up 4%. Now it's only up 2.4%. Wow. Very, very exciting news from Iran, though. I'm happy that they had a nice pop and not all the AI infrastructure names were like sort of flat on the day. It would have been boring. I know people are saying that the news is out, but I'm not seeing it.
Just on what tenor?
Sorry.
What
Sorry.
news?
The earnings for Iran.
Yeah, again, I don't see. I'm just seeing kind of the.
This is what I see for their website right now. Sorry, I'm in dark mode. Iran to release Q3 earnings. Not that they have released Q. This is Q2.
Yeah, that's crazy.
Don't see anything there. This is news from the other day about their acquisition. Where
I think.
is?
I mean, I'm not gonna lie. I think Iran's call is gonna be pretty cool too. I obviously want to listen to CoreWeave, but the Iran one I think is going to be interesting as well. So I might listen to that after.
Yeah, we're definitely going to listen to both. This is what my saunas have become these days. Is I just put on the earnings calls that I didn't hear throughout the day, and I sweat it out both physically, but also sweat it out mentally because I'm not in this name. So I sit in there and I cry. Might listen to Iran's call. Yeah, if it's pumping just on that partnership, I'm curious to what more they could say about it other than what the press release had already announced.
Yeah, there are some. I mean, I don't follow it too much, but there are some reports of. Nope, I haven't heard it. Just in chat, so I don't know if it's true.
Yeah, like I still haven't seen anyone post about their earnings. Upwork was also reporting today, and they're down 15%. Sorry, I typed in Upwork. Upwork down 16%.
And AI is taking all that job. I stopped using a lot of those gig places after AI.
Oh, brother, me too. There used to be some times where I'd get my videos edited or thumbnails and stuff like this. Now it's
freaking OpenAI. I think their new imaging thing has been strong.
Yeah, OpenAI's, yeah.
Yeah.
Well, actually, I hired a guy, so I guess I've done the ultimate Upwork. I've hired a gig worker full time.
Nice.
Sorry?
Nice. You got someone to do videos and thumbnails?
Yeah, yeah. Well, actually, he's just He's just a vibe coder, and I'm getting these emails all the time. Hey, you ran out of credits. We're automatically reloading for you. So I'm part of I'm helping out, man.
You're part of this. Nice. That's what I like to hear.
Yeah, he's charging my card.
Yeah.
But and it's all going to OpenAI right now. All Codex GPT 5.5.
I think I should cancel one of my Gemini. I don't use Gemini.
Which call are we
All
going to
right.
listen to? I think we're still on the path to listen to CoreWeave, unless there's extreme broad consensus. We can do a poll in the chat, but
yeah,
we still don't have Iren's numbers, or at least not that I can see. Bitsal, you said you had them. I don't know if potentially you can send them to me over Discord or X or something. I can receive that from you.
Cool, Kevin.
No, a guy in chat, Vitsal.
Yeah. I mean, I think for both plays, it's going to be more the Q&A portion, right? I do think. I mean, I'm obviously here for CoreWeave, but I think the Q&A for both is just going to be the big thing.
I just had a buddy of mine there's like a SoFi group chat, and he just added me in the group chat and said, "Iren, please," in front of everyone. That's so funny. Okay, let's do a poll in chat. Call to listen to. However, Jose is going to kill me if you guys vote Iren. So
I am.
What?
Oh, I am 100%.
Yeah. So we'll do a poll, but just know that we're going to listen to CoreWeave anyway. Just know that you guys have a vote, but Jose has a 51% voting share.
51%.
Parsifal said, "Don't vote, just do CoreWeave."
We'll take bribes. We'll take bribes.
Okay, let's see. CoreWeave, Iren. Let's start sorting the top names so we have them all on the same chart. Which other ones do we want to see? InnoData.
What have been the biggest movers?
That's what I'm trying to sort right here.
I think Net was also one of them.
Which one?
Cloudflare, I think, was also a big mover. I don't. Last time I checked.
I think these were the really big movers here at the top. So we have Upwork down 17%, Iren up 21%, InnoData up 30%, Cloudflare down 13%, JFrog up 14%, TTD down 13.8%, Block up 9% roughly. I don't know if I missed anything else.
I thought I saw
maybe
Expedia.
Yeah. Those are the big movers.
Yeah.
And
what does JFrog do? Do you know? I don't follow it.
I don't follow them either. They go in the software bucket for sure. You don't want to look at the early results of the poll.
Is it like 80-20?
No, but it's like 60-40.
Oh, okay.
CoreWeave covers both CoreWeave and their host providers, Core Scientific, etc. That'll be more interesting.
Yeah. So Clarence just it seems like some people just came in from a midstream. I don't know if he pushed some people here, Tanner, but they're wondering thoughts on Iren and Nvidia deal. What are you? I know we just talked about it, but just a recap. What are your thoughts about this? About this deal there, Tanner?
Yeah, I mean, I think that it's very exciting for Iren. I think it's my biggest thing is, are people actually taking this name seriously? Like whenever I saw like the sort of their low underperforming ranking on the semi-analysis cluster max ranking, that always gave me concern. But part of the reason why is they said that Iren didn't have access to high quality chips. But if they're now partnering with Nvidia, maybe that means that they can potentially start getting access to really high quality chips and better expertise from Nvidia, and maybe get that similar bump that Nebius just recently got and CoreWeave definitely just got, for being a little bit closer and having a stronger relationship with Nvidia. So I can't imagine it's bad news.
Yeah, I agree. And I think this is one of the things with like investments, right? It's either you wait for the better news to start to become more interested in the company, or you kind of read in between the lines to say, hey, look, is this actually one that the market is mispricing? So I Rentals here got this one right. But yeah, I do believe that that this deal with Nvidia is a straight indication that they have the opportunity to be a top neo cloud player.
Jack said, bribing you to mention Coinbase like in your title. We did talk about Coinbase's numbers. I didn't see anything in particular in their numbers that were, that need to be screamed out right now. They definitely had a big miss, and but the market also realizes that we're not really betting on Coinbase for this quarter. It's for whenever crypto comes ripping back. So
What is Bitcoin at? I don't follow, but
Bitcoin, I think, is still above 80,000.
oh
Wow,
wow,
literally
okay.
80,000 almost on the dot.
It would have been it'd be like 80,007.
It's 80,002. I said a little above 80,000. You didn't know I meant the difference of this guy's donation. Um, but yeah, and ETH, I think, had a bad day. 2290. Yeah. Okay. IREN was up a lot more, now fallen below 20%. Do you think that they'll be able to hold this gain?
Um, I think it's all going to be on the Q&A, right? I wonder if some analysts are going to ask the difference between the warrant and some of like the other investments from Nvidia. Any clarification on how the Microsoft thing is working? I think that's probably moving good. But I think it's all about the Q&A, right? And the story that management tells us that would really determine if the thing holds or not.
Okay, let me make sure that I have the CoreWeave the CoreWeave's presentation here. CoreWeave, for me, just so for other people in my position, I'm not a shareholder of CoreWeave. I do have stakes in other neocloud names.
Yay!
Yeah, but really, it is a proxy for me on Nvidia, and I expect that if we were to take a shot for the amount of times that they say Nvidia by the end of this call, we're going to be drunk, and that's why I'm listening. I want to hear what they have to say.
And Sam, I was just talking about this with Amit earlier today. I feel like earnings calls are so great for proxy information, or just getting ahead of the curve. I feel like sometimes retail investors think that we don't have information to be able to be ahead of some of these trends. But just the CPU shortage is a prime example. Like Intel, Nvidia, and AMD were talking about this like 5 months ago, 6 months ago, right? So
Yeah.
it's like, and unfortunately, we can't cover every single stock. Not one investor can cover. So obviously, people can miss certain things. But I think earnings calls and conferences are super crucial. If you ever have time, if you ever want to do research, I think those two places can give you a wealth of information of what's to come for a lot of this industry.
Perfect. Yeah, no, I completely agree. What was I going to say? This was a little snapshot of their quarter that we ended up seeing. I wanted to ask you about the Jane Street thing before we ended up listening to the call. The Jane Street customer thing was really interesting. I think they announced like a $6 billion compute deal. But along with that, they also announced that Jane Street was going to be investing $1 billion into the company to help pay for the compute that they're setting up. Is this going to be a new form of like financing for these companies where
yeah, I can see that. Like it's a financing form. Yeah.
like large customers that have massive I think Microsoft, we found out that they like prepaid for like 40% of the Nebius contract that they had. But potentially for Microsoft, it might be more advantageous if they could also get stock in return.
Yeah, and I can see that with this, right? With Jane Street, it's like instead of prepaying, you can invest also. Uh,
Mm-hmm.
and I mean, it makes sense, especially if like you are a CoreWeave and you don't. First, financing is definitely crucial to get. But if you don't have the capacity, if you are already focusing, oh, I've been replaced.
Brother, you could join right now. You're
You
never
can
replaced.
join right now. Yeah, this guy. Send him the invite before this guy hates us for the rest of the life.
You got 5 minutes.
He told me he was going to be watching some soccer game or something, and he was going to be busy. No, but yeah, I didn't think about it like that, Tana, but it does seem more like of a financing, a new way of finance, especially if you don't have enough capacity. It's like, hey, look, I'm sold out. The only way I can make sure I have inventory for you or compute for you is if you help out the balance sheet one way or another.
Yeah. Yeah. It is crazy, right? Like the need for chips is so high, and the time to when you need them is also so high, that even companies that have their own data centers, like Microsoft is sure they're experts in this. They're still coming to customers and going, "Hey, here's some money. Please just help us build. We can't build it all ourselves. We'll pay you with a nice, healthy premium to go out and get the chips, set up the land power shell, and get us online faster."
And this is why I actually don't mind the shortage, right, Tanner? Because I think the shortage in anything, right, or the bottlenecks and everything are going to make sure this cycle lasts for a while. Because if you can't get all your chips, you're gonna this guy couch freaking. If you can't get everything right now, you're gonna make sure you're working with other people, and the demand is going to continue to grow, and everybody can win at least for now.
We have a few minutes till the earnings call. However,
Yeah. I don't know if you can share that real quick from Simon, Tanner. Between the Nvidia announcement, it does seem like they're buying also a company in Europe. I think that's how the expansion in Europe is happening. So they're buying this group with that's a lot of half a gigawatt is a lot that they're going to be purchasing
yeah,
there.
it's a ton.
See, Couch was in watching football. He said send the link. Freaking Neo.
U.S. military just carried out strikes on Iran. So I guess U.S. officials say this is not restarting of the war. Okay. Iran just claimed it's fired missiles at 3 U.S. destroyers. They launched at 3 U.S. destroyers near the Strait of Hormuz, targeted by the Iranian Navy. Great.
Hello.
Iran does not seem to care about Iran.
Well. Finally, nice of you to join us.
And nice of you to say. We even talked 4 hours ago. You said nothing about
I didn't know
stream.
about. I didn't know. Tanner texted me 2 hours ago, right? So it was after we hung out, Neo.
You
right?
have a minute and 30 to say how you're feeling about these earnings. Go. You have the rest of the time.
I honestly have no idea what's going on. I don't know. CoreWeave has a backlog of about $100 billion. Market doesn't give a crap. Iron gets Nvidia, so of course it goes up, but it goes up probably because I didn't buy options this week for Iron. So
that is true. That's all the stocks that go up.
Mercado Libre reported already?
Yeah.
Yeah. It was a good quarter. Stock fell. You know,
Wonderful.
classic.
Just like what you never mind. I'm okay.
Couldn't even hold his tongue. Okay. We have earnings in 45 seconds. What else are you following, Neil?
I think that's enough. Or is there something else?
InnoData's up, or the trade desk is down 15. InnoData is up 34%.
Cloudflare's down 13.
Yeah, there's a couple fun ones.
So we're not making money, or we are making money?
I don't know what your portfolio is.
I know, but do you own CoreWeave in the end or not?
No.
So Jose, we're losing.
We're losing. Wait, I thought it was flat. Wasn't that flat?
0.44%. This is a little.
This is flat. I'm doing nothing right now.
Okay, the event is starting. Good luck, everyone. Enjoy the call. But I don't hear anything.
Hello, everyone.
Okay,
Thank you for joining us, and welcome to CoreWeave's first quarter 2026 earnings call. After today's prepared remarks, we will host a question and answer session. If you would like to ask a question, please press *1 to raise your hand. To withdraw your hand, press *1 again. I will now hand the conference over to CoreWeave. Please go ahead.
Thank you. Good afternoon and welcome to CoreWeave's first quarter 2026 earnings conference call. Joining the call today to discuss our results are Mike Intrater, CEO, and Nitin Agrawal, CFO. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's earnings press release and in our quarterly report on Form 10-Q to be filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investors.coreweave.com. A replay of this call will also be available on our investor relations website. And now I'd like to turn the call over to Mike.
Good afternoon, everyone, and thank you for joining us. Q1 was a transformational quarter for CoreWeave. We delivered our strongest quarter for customer bookings, signing more than $40 billion of new commitments and growing contracted revenue backlog to nearly $100 billion. We generated approximately $2.1 billion of revenue, up 32% quarter-over-quarter and 112% year-over-year, and surpassed 1 gigawatt of active power, a milestone only a handful of cloud companies have ever achieved, as we convert contracted capacity into revenue-generating cloud services. We concluded Q1 stronger than ever. AI diffusion is accelerating, and our addressable market, customer base, and platform are all expanding rapidly. CoreWeave remains at the forefront of this generational shift. The 4 themes I would like to highlight today are: 1, the demand environment is intensifying, driven by the hypergrowth of our existing customers and the rapid maturation of new enterprise verticals. 2, we have broadened the capabilities of our platform to serve every customer use case, from training to inference to agentic workloads, positioning CoreWeave to benefit from sustained margin-accretive growth. 3, we have reached hyperscale, with more than 3.5 gigawatts of contracted power, up more than 400 megawatts this quarter alone, with the substantial majority expected to be online by the end of 2027. And 4, our financing engine has taken a significant leap forward, unlocking new sources of capital across markets at a lower weighted average cost enabling CoreWeave to secure more than $20 billion of debt and equity year to date. Beginning with the demand environment, CoreWeave's addressable market is expanding and customers are choosing our platform for the long term. AI workloads are moving from training to inference, agents, and enterprise production across industries, which is increasingly compute intensive. As a result, our core customers, historically hyperscalers and foundation labs, are deepening their commitment to us, while an entirely new wave of enterprises are arriving and demanding access to CoreWeave's platform at scale. This trend drove record revenue backlog additions in Q1 as we signed our initial Vera Rubin deals, while continuing to monetize our Blackwell, Hopper, and Ampere capacity. These new customer commitments mostly contribute towards our 2027 targets. Importantly, we expect them to be highly contribution margin positive and consistent with the return profiles we have historically underwritten for new deployments. In Q1, we added Anthropic as a customer to support the development and deployment of the Claude family of AI models. We also signed multiple new orders with Meta, including the $21 billion agreement announced in early April. The world's 4 preeminent AI model developers now rely on CoreWeave Cloud, as do 9 of the 10 AI leaders outside of China. At the same time, new verticals are emerging that have already reached billion-dollar-plus scale. Within financial services, technology-driven firms are scaling their core machine learning workloads with CoreWeave. These are not AI labs, but rather enterprise customers who see the tangible financial impact and attractive returns that come from adopting CoreWeave Cloud. This vertical is already approaching $10 billion in our revenue backlog, driven by expanded commitments from existing partners like Jane Street, who added $6 billion of capacity in Q1, and new customers like Hudson River Trading. Physical AI and spatial computing has also surpassed $1 billion in revenue backlog contributions. Companies pushing the frontier of world models, robotics, autonomous driving, and scientific discovery are choosing CoreWeave because of our unique combination of performance, specialized infrastructure, and developer tools that accelerate training and deployments. Recent new customers include World Labs, PhysicsX, and Sunday Robotics. Taken together with our focused execution, these dynamics are driving CoreWeave's customer diversification. Today, we have 10 customers committed to spending at least $1 billion with CoreWeave. Serving this breadth of customers and workloads requires a mix of new and prior generations of Nvidia GPUs as inference demand skyrockets and agents enter the workforce. As a result, demand is accelerating across the board. Average pricing for the A100s, H100s, H200s, and L40s all increased quarter over quarter, and we remain largely sold out for near-term capacity across our fleet. This validates what we have long believed. Demand for inference-ready compute across generations of GPUs is compounding. We expect this will be durable and accretive to our long-term margins and earnings power. The scale and quality of demand deserves a moment of context. Inference is the monetization of AI, and its acceleration is driving real-world productivity gains that are justifying increased investment and broader enterprise adoption. As a result, we added more backlog in a single quarter than most AI cloud platforms have in their history. Moving on to CoreWeave's cloud platform. We are deliberately strengthening our integrated stack to deliver the most capable AI cloud. CoreWeave empowers researchers, developers, and platform engineers to rapidly iterate across training, inference, and agentic workloads, accelerating the journey from experimentation to production at scale. As we do, we are introducing new capabilities to ensure enterprise customers can build on CoreWeave. For example, in Q1, we introduced CoreWeave's Trust Center to allow enterprises to productize AI quickly and efficiently without compromising their security or compliance standards. Customers rely on CoreWeave for our fully integrated set of AI cloud capabilities, not just GPUs. To unlock the full potential of accelerated computing, they need CPUs, storage, networking, software solutions, and developer tools working together across every layer. Today, more than 90% of our reserved instance customers use at least 2 of our products, while more than 75% use 3 or more. Our storage business continues to multiply quickly. We are also seeing similar trajectories in our software, CPU, and networking businesses, each of which we expect to exceed $100 million of ARR by the end of the year. It is inspiring to see how customers are leveraging these products to innovate. For example, Perplexity will power its next generation of inference workloads on CoreWeave's platform, while also leveraging weights and biases to help train, fine-tune, and manage their models. Meanwhile, Advita Bio is using CoreWeave to accelerate pathways and single-cell analysis on large-scale biological datasets, compressing workflows that previously took weeks into minutes. As we scale, we are offering customers greater flexibility in how they consume compute. In Q1, we introduced Flex Reservation and spot pricing, revolutionizing how customers manage peak demand and unpredictable bursts, allowing them to budget more effectively while taking advantage of larger preemption windows CoreWeave provides. Both offerings were immediately oversubscribed. We are also making cross-cloud AI easier for customers, while ensuring CoreWeave becomes the critical cloud partner. Building upon the momentum of CoreWeave's AI object storage and our zero egress offerings, we recently announced CoreWeave Interconnect in collaboration with Google Cloud. In addition to Sunk Anywhere and LADA cross-cloud, these aim to remove the friction of managing a multi-cloud footprint, making it simpler and faster for organizations to run workloads anywhere, and are already proving to be highly effective at capturing increased wallet share. And to meet customers where they are, we are beginning to offer CoreWeave Omni, enabling us to deploy and operate our full cloud stack in customers' own data centers with their GPUs. Early interest is strong across potential cloud, enterprise, and sovereign customers, and we look forward to sharing updates as it comes to market. Taken together, these capabilities reflect a simple but powerful shift. Customers come to CoreWeave to build and deploy with us. Turning to execution. We convert scarce AI infrastructure into revenue-generating AI cloud capacity quickly, reliably, and profitably. CoreWeave surpassed 1 gigawatt of active power this quarter. We remain firmly on track to reach or exceed our target of more than 1.7 gigawatts by the end of 2026. We are one of only a handful of cloud platforms in history to reach this scale, and we are the only one that is purpose-built for AI. Each new build-out is complex with 5 phases: power, cooling, networking, servers, and the software orchestration layer. we have navigated this complexity across close to 50 data centers, consistently delivering best-in-class dock-to-live times for customers. CoreWeave views these build-outs as investments in the communities that host them, and we work to earn our place in the regions we operate. Our facilities serve as anchors for regional economic activity that compounds over time. Grid upgrades, workforce development, sustained local investment. Each project comes with its own set of unique opportunities and challenges. We approach every market we enter with that in mind, helping our team and partners broaden their expertise and execution capabilities for the next project. We added more than 400 megawatts of contracted power in Q1, bringing our total contracted power to more than 3.5 gigawatts. We expect the substantial majority of this contracted power to come online by the end of 2027. We added this capacity entirely via long-term leases as data center partners, and the financing markets recognize the unique combination of execution, technology, and contracted demand that defines our business. Looking ahead, we plan to continue to expand our contracted power footprint through leases, while also accelerating our development of self-build sites, which will provide us with greater operational control and long-term financial upside. We expect our first self-build site to come online later this year. Our lease and self-build strategies are further complemented by our strategic relationship with Nvidia, where we continue to evaluate opportunities to accelerate the expansion of our footprint together. Our multifaceted approach uniquely positions CoreWeave to grow in a highly competitive market. Finally, touching on our financing approach. In Q1, we reached a transformational milestone that will drive CoreWeave's weighted average cost of capital lower, closing our $8.5 billion delayed draw term loan 4.0 facility. While Nitin will speak to our broader success in the capital markets, I wanted to highlight a few elements of this specific facility. This is the first ever investment-grade delayed draw term loan backed by HPC Infrastructure, achieving an A- equivalent rating from Moody's, Fitch, and DBRS. The facility was non-recourse to the parent. The transaction, which was well oversubscribed, was priced at a level implying a cost of less than 6%. With this financing, we have taken an important step towards accomplishing our stated goal of driving our cost of debt to investment grade. This is not an incremental improvement. This is a structural shift in how we expect to finance investment grade customer contracts going forward, in what is among the deepest parts of the capital markets. As a reminder, we have already reduced our weighted average cost of debt by approximately 600 basis points from 2023 to 2025. As of today, we have further compressed our weighted average cost of debt by approximately 80 basis points year to date, while securing more than $20 billion of debt and equity capital, de-risking our execution plan and positioning CoreWeave for continued hypergrowth. Before I turn it to Nitin, I wanted to reiterate that we have been building this company against a clear set of defined objectives. 1, continue to deliver the most technically advanced cloud platform for AI workloads, empowering our customers to innovate, build, and deploy. 2, diversify and grow our customer base. 3, deliver best-in-class execution at hyperscale. And finally, position our capital structure to scale with the opportunity. Our backlog is now approaching $100 billion, all tied to contracts that are either online today or expected to begin to come online through 2026 and 2027. We have built a diversified customer base that includes each of the world's leading model platforms and extends to large enterprises across industries that represent tens of billions of market opportunity and growth. We have moved beyond just GPUs to deliver an integrated AI cloud platform for our customers who are rapidly adopting our CPU, storage, networking, and software solutions. Active power now exceeds 1 gigawatt, and our contracted power is more than 3.5 gigawatts, leaving us strongly positioned to meet our goal of reaching more than 8 gigawatts of active power by 2030. And we are continuing to innovate in the capital markets, executing the first investment-grade rated financing ever secured by HPC infrastructure, and defining a new asset class along the way. Each of these makes the business more durable. Each of them compounds, and each of them is a building block for our next stage of growth. The constraint in AI is no longer whether enterprises and AI labs want to deploy. It is how quickly high performance, reliable AI cloud capacity can be delivered. That is what CoreWeave does best. With that, I'll turn it over to Nitin.
Thanks, Mike, and good afternoon, everyone. Q1 marks another historic quarter for CoreWeave. Record customer commitments, bringing backlog to nearly $100 billion, more than $2 billion of quarterly revenue, and more than 1 gigawatt of active power, while unlocking deeper, more efficient sources of financing. We are delivering precisely in line with the roadmap we laid out on our last earnings call, diversifying and growing with customers, signing customer contracts with attractive and consistent margins, bringing new capacity online rapidly, and expanding our purpose-built AI cloud platform. Demand for CoreWeave Cloud is accelerating, and we remain largely sold out of our 2026 capacity, with prices increasing across the board from Ampere to Hopper to Blackwell. We are seeing this extend into 2027 as well, as we've begun allocating capacity we expect to come online next year. Turning to Q1 results. Revenue was $2.1 billion in Q1, up 112% year over year and 32% sequentially, driven by continued strong execution in deploying our capacity. Demand for CoreWeave Cloud continues to intensify. Revenue backlog for the quarter ended at $99.4 billion, up nearly 50% sequentially and close to 4x year over year. This revenue backlog is near-term weighted, with 36% expected to be recognized in the next 24 months and 75% in the next 4 years. With enterprise adoption intensifying and our customer base diversifying, commitments from non-investment grade AI native companies and foundation labs now represents less than 30% of our overall backlog. Customers continue to commit their foundational AI workloads to CoreWeave, resulting in weighted average contract length for new capacity remaining at approximately 5 years. Operating expenses in the first quarter were $2.2 billion, including stock-based compensation expense of $153 million. The increase in our operating expenses was a direct result of continuing to scale our active power capacity, converting backlog into revenue. This drove the corresponding increases in our cost of revenue and technology and infrastructure spend. In addition, the increase in sales and marketing was driven by increased investment in our go-to-market organization as we further diversify our customer base and expand into new products and markets. G&A increased, driven by personnel costs to support our growth while moderating relative to revenue growth on a quarter-on-quarter basis. Adjusted EBITDA for Q1 was $1.2 billion compared to $606 million in Q1 of 2025, growing 91% year over year. Our adjusted EBITDA margin was 56%. Adjusted operating income for Q1 was $21 million compared to $163 million in Q1 of 2025, just above the midpoint of our guidance. Our Q1 adjusted operating margin was 1%, which we continue to expect to be its low point as cloud capacity further ramps in coming quarters. Net loss for Q1 was $740 million, compared to a net loss of $315 million in Q1 of 2025. Interest expense for Q1 was $536 million, compared to $264 million in Q1 of 2025, driven by increased debt to support the continued scaling of our infrastructure and delivery of our contracted customer commitments. We recorded an income tax provision despite a net loss due to valuation allowance on net deferred tax assets. Absent significant discrete items or a change in circumstances, our tax rate should remain broadly consistent over 2026. Adjusted net loss for Q1 was $589 million, compared to $150 million in Q1 of 2025. Turning to capital expenditures. CapEx in Q1 totaled $6.8 billion as we continued to execute on schedule. Construction in progress, CIP, remained roughly unchanged sequentially. As a reminder, construction in progress represents infrastructure not yet in service and not yet being depreciated. When these assets come into service, they drive incremental revenue and corresponding depreciation. Our financing structure is designed to match this deployment model. Large majority of our term debt is structured as delayed draw facilities, meaning capital is only drawn as the data centers are operationalized. While global supply chain remains complex, we continue to navigate these challenges with operational discipline, leveraging our partner relationships to strategically source required inputs. Turning to our balance sheet and strong liquidity position, as of March 31st, we had more than $3.3 billion in cash equivalents, restricted cash, and marketable securities. Since the start of the year, we have made significant progress in strengthening our balance sheet and expanding the depth and breadth of our access to capital. Our success is grounded in the principle that the capital we raise is tied to customer demand. That mindset has informed the business since its inception and has proven critical in our ability to efficiently scale our access to capital. In Q1, we raised $2 billion of equity in connection with the expansion of our relationship with Nvidia. We also secured approximately $8.5 billion of investment-grade debt via our fourth delayed draw term loan, which was a seminal transaction for CoreWeave. As Mike mentioned, DDTL 4.0 marked the first ever investment-grade rated HPC infrastructure-backed debt facility, receiving an A- equivalent rating from 3 independent rating agencies. Not only did we price the facility at an implied rate of less than 6%, a meaningful decrease from our previous facilities, we also introduced an ABS-style draw feature, unlocking an additional $1 billion of drawable capital upon stabilization of the underlying contract. We can use this incremental capital to help fund future investments for the delivery of subsequent capacity at a highly attractive price. Further, DDTL 4.0 was structured as non-recourse, allowing us to create a facility that offered enhanced capacity and improved pricing without impacting CoreWeave Inc. and its lenders. Overall, we expect this approach to become the new norm for CoreWeave when financing the build-out of capacity for investment-grade customers. This represents a substantial step forward in our ability to access capital at immense size and at rates competitive with the hyperscalers. As we entered Q2, we have built upon this momentum, securing more than $10 billion of additional debt and equity across several different transactions. Each of these was significantly oversubscribed, highlighting the overwhelming investor demand to participate in CoreWeave's hypergrowth. In fact, both of our recent convertible and high-yield offerings were upsized meaningfully due to investor interest. While the $1 billion strategic investment we received from Jane Street highlights the value and differentiation our customers see in our platform. In conjunction with these raises, S&P also moved our corporate rating outlook from stable to positive. Yesterday, we priced our fifth DDTL facility, the first to be syndicated in the public loan markets, to finance contracts with OpenAI and Cohere. Again, investor appetite proved to be significant, allowing us to price the facility 50 bips inside our initial marketing range. Following this transaction, we have secured all financing required to deliver the entirety of our existing commitments with OpenAI. This transaction further underscores investor support for CoreWeave when financing investment-grade and AI lab customers alike. The combination of these transactions brings us to more than $20 billion of debt and equity capital secured year to date. Our broadening access to capital at lower blended cost will continue to be an important lever for CoreWeave as we convert backlog to revenue and operating cash flow and proactively manage our capital stack. Accordingly, we have no debt maturities until 2029 other than self-amortizing contract-backed debt and OEM vendor financing. Turning to guidance, the strength of our Q1 results, disciplined execution, and continued momentum we are seeing across our customer base gives us confidence in reaffirming our full-year guidance of $12 to $13 billion of revenue and $900 million to $1.1 billion of adjusted operating income. For Q2, we expect revenue in the range of $2.45 to $2.6 billion. We expect Q2 adjusted operating income of $30 to $90 million as margins start to expand from their Q1 lows, consistent with our previously discussed expectation. This margin dynamic is timing-based, not economic. To provide some further detail here, upon receipt of a powered shell, we incur lease and power costs while depreciating server and other data center equipment during the fit-out process, which on average takes us about 1 to 2 months. During that period, we recognize costs but no revenue, causing these new deployments to run at negative contribution margins. By month 3, however, we are typically generating revenue with contribution margins normalizing in the mid-20s. Since the beginning of 2025, we have almost tripled active power. At more than 1 gigawatt, we are rapidly approaching escape velocity and continue to expect adjusted operating margin to expand sequentially for the remainder of the year, returning to low double digits by Q4. Our Q2 interest expense is expected to be in the range of $650 to $730 million, reflecting the growth in our debt balance to finance our accelerating deployments. We expect capex to be $7 to $9 billion as we continue to bring significant capacity online in service of our contracted revenue backlog. For the full year, we now expect capex of $31 to $35 billion. The increase on the low end from our previous guidance is related to increases in component pricing. The long-term nature of our contracted revenue backlog continues to provide us with clear visibility into 2026 and beyond, and we remain confident in the revenue and margin targets we have put forward. We now expect to end 2026 with $18 to $19 billion of annualized run rate revenue, increasing the low end of our expectations by $1 billion. We continue to expect to grow annualized run rate revenue to more than $30 billion as we exit 2027, more than 75% of which is already contracted, excluding any benefit from not yet exercised customer renewals. We have already secured sufficient power capacity to deliver on our 2027 target and expect to continue to add new capacity and customer commitments to further build on our incredibly strong foundation. With each quarter of execution, each megawatt delivered, each contract signed, and each new customer added, we are methodically executing against our long-term plan and building further conviction in our ability to meet or exceed our long-term revenue and margin targets. Q1 was a quarter of measurable progress. Revenue and backlog grew materially as we continue to add new blue-chip customers while growing with our existing partners. Our deployments continue to be profitable at the contract level. While Q1 represented the trough of our margin trajectory, we remain on track for sequential margin expansion through the balance of the year, with revenue and margin growth expected to inflect as we cross from Q2 to Q3. As important, we have made significant progress in developing our capital structure. More than $20 billion of debt and equity secured, all via meaningfully oversubscribed transactions. Each of these is independently significant. Together, they compound because the ability to finance the scale of the opportunity ahead at declining cost is one of the most important levers we have. We have a contracted revenue backlog that provides multi-year visibility and a capital structure that is deeper and more cost-efficient than at any point in our history. We look forward to updating you on our progress through the balance of the year. Thank you. With that, we will open up for questions.
We will now begin the question and answer session. Please limit yourself to one question and one follow-up. If you would like to ask a question, please press *1 on your telephone keypad. To withdraw your question, press *1 again. Please pick up your handset when asking a question. If you are muted locally, please remember to unmute your device. Please stand by while we compile the Q&A roster. Your first question comes from the line of Keith Weiss from Morgan Stanley. Keith, please go ahead.
Excellent. Thank you for taking the questions. And congratulations on a really great quarter across like all of the key kind of strategies that you guys are trying to push out into this marketplace. And the velocity of this business is just outstanding. A couple of questions that are just kind of clarifying questions within this, because there's a lot of numbers, a lot of new stuff being thrown at us. And maybe it's starting on the capex side of the equation and the higher component pricing. I think that's something that's weighing on the stock a little bit after hours. Can you explain to us how the higher component pricing works through the contract and how that ultimately affects your profitability? And then maybe if we could talk about the Nvidia relationship and the expansion of that relationship. What fundamentally changed in that relationship this quarter? And how should we think about that 5 gigawatts within the 8 gigawatt active power target for 2030? And I'll leave the rest of my questions for the callback.
Thank you, Keith. That was a mouthful of questions there. Let me try and kind of deconstruct them and kind of work through them one at a time. So the first thing is a question regarding the capex budget and the higher component pricing. And this has been a thematic reality for the cloud and for artificial intelligence infrastructure across the space. Look, we've kind of built this company in an environment that has always been challenged on the supply chain side. So we're really good at it. We think about it a lot. We've built the company from an efficiency perspective. And so, we're used to operating in a challenging environment around components or inputs into our product. Having said that, in the last 6-9 months, there has been an acute shortage of certain components that have moved up. And like I said, you've heard about that across the space. When you're thinking about that, for us, the way to think about it is that we are a success-based company, which means that we build our contracts to incorporate the cost of all of the components that are necessary to deliver infrastructure. And so, by and large, we are insulated from the price inflation on some of the components because we include that in our pricing that we ultimately bring to clients in order to target the margins that Nitin spoke to, right? Is up in the mid-20s is how we think about it on a unit basis. And so, it's an issue, it's a problem, but we have an incredible capacity to navigate the supply chain. We have great partners, and we include the pricing that is required in order to end up, delivering the infrastructure that's required, but also ensuring that we're able to secure the economics that we're targeting. The next question you asked was about Nvidia, and it's been a very exciting period for us with Nvidia. They came out and they really did a series of different things, but the two most important were the qualification of our software solution as a reference architecture for them, and that was an incredible validation of the quality of the software solution that we deliver to market. We've talked about this before, is that we are dedicated to delivering the best solution to artificial intelligence infrastructure consumers in the world. And we believe we do that, and we believe that Nvidia supports that position because of their position around our software as a reference architecture, which is fantastic. With regards to the 5 gigawatts worth of infrastructure, I kind of want to start that from the position of, in the last 12 months, CoreWeave has secured 2 gigawatts worth of infrastructure. Within the last quarter, we have secured 400 megawatts worth of infrastructure. We are capable of securing infrastructure at gargantuan scale, independent of any support from Nvidia or anyone else. What the 5 gigawatts does for us is it gives us the ability on an opportunistic basis to accelerate our ability to go out and secure additional infrastructure at a truly amazing scale as our clients are trying to secure our solution for delivery of computing infrastructure. And I think those really are the highlights around our relationship in the last quarter with Nvidia, beyond just the standard us integrating with them on an engineering first basis, which has just been fantastic.
And Keith, to round up your answer on the capex piece, capex shows us for us before revenue and cash flow, so you see showing up first. The piece on the P&L impact of that, it's already incorporated in the guidance that we've issued you today. So
excellent.
With that,
thank you.
Keith, I know this is your last quarter earnings covering us. We would like you to, to thank you for your partnership and the support that you've shown for us since our IPO to this day today. Thank you so much, Keith. You will be missed.
Thanks, Keith.
Thank you guys for an inspiring story. What you guys have built here has really been incredible, and it's been awesome to watch firsthand how you guys have scaled this out so quickly.
Great team.
Your next question comes from the line of Brent Thill from Jefferies. Brent, please go ahead.
I'll throw out an excellent for Keith. Congrats. Nitin, 81 million in EBITDA on the front half, but you're guiding to 919 million in the second half on the bottom line. What's giving you conviction in the bottom line build in the back half of the year?
Absolutely. So from a Q2 perspective, it is coming in exactly where we expected it to be. Remember, everything in our business is defined by active power and capacity ramp schedules, which are not necessarily linear. What is important in this context is that our revenue growth and our margin trajectory is coming across exactly as we articulated in our Q4 earnings. And I think your question was probably around EBIT, not EBITDA. So I just want to clarify that for people. For EBITDA, we generated 1.2 billion in EBITDA this quarter. When you think about from a Q1 perspective, Q1 was the trough of our margin story. What we remain on track for sequential margin expansion through the balance of the year, as we had described, with revenue and margin growth expected to inflect as we cross from Q2 to Q3. We are reaffirming our full year guidance, including full year revenue, full year adjusted operating income, and that we will exit the year with low double-digit adjusted operating income margin. We are reaffirming our active power, and we are raising the floor of our 2026 exit ARR guidance. All of these are indicators in the conviction that we have on our execution plan for the remainder of the year. What you will see us is executing through this plan and expect to see our adjusted operating income accelerate faster than revenue growth in the second half of the year.
Brent, just a couple of other things. You asked about what gives us confidence, and a couple of things I wanted to say is, as you're watching a business kind of achieving escape velocity, is that we have gone ahead and worked through our supply chains to ensure that we are able to hit those numbers. We are in approximately 50 data centers. We have no single data center provider that delivers more than 17% of our active infrastructure. We have multiple OEMs, ODMs. We are really built now to lean into a resilient supply chain that crosses all of the components that we are required to be able to deliver in order to drive that revenue. And we are reaffirming it because of the level of confidence that we have that because of that resiliency, we will hit those numbers.
Great, thank you.
Your next question comes from the line of Mark Murphy from JP Morgan. Mark, please go ahead.
Yeah, thank you. I'll add my congrats to Keith, and congrats on the strong Q1 performance. To the extent that you have business that you booked previously and it's not fully up and running, and now the cost of components has risen, I would think the cost of energy has risen, although maybe you have some of that locked in. Is the margin profile of this previously signed contract slightly different than originally contemplated, or do you have some recourse to somehow to flow through increased pricing or maybe restructure some of those contracts? And I have a quick follow-up.
Yeah, it's a good question, and and thanks. It really, I really do want to say that this is an extraordinary quarter for the company, and we are incredibly excited. Look, in terms of the components, you see us making a slight adjustment in the capex to capture small components of the capex stack that might go through some price inflation. But when we are pricing our deals, we are pricing them with purchase orders in hand for the infrastructure that is required to be able to deliver on it. We understand what the power cost is going to be today, next year, and out through the term of the contract, because that is contractually delivered to us. And so we've done a really good job of understanding what the components and electricity costs are going to be. We have it structured so that it is effectively passed through when we enter into the contract, once again, to ensure that we're able to hit our targeted margins on a unit basis.
Okay, understood. And just given the success you've had with the bookings in Q1, the data center build-out execution is great. You have the diversification across enterprises, the successful capital raise, and then you do have noticeable revenue upside in Q1. What holds you back from just passing through that revenue upside into the full year revenue guidance? Because I mean, in some sense, technically, we'll reduce our rest of year revenue forecast a little. Is there some other effect? Sometimes there's weather or just the infrastructure shortages or maybe labor shortages in there that maybe is creating a mild headwind.
Yeah, from our perspective, we mentioned this in our last earnings call as well. We pretty much remain sold out for our 2026 capacity. So that is continuing to be true for us at this point of time. Where you would see this kind of inflect for us is around two vectors. We've raised the guidance for the floor of exit ARR. So we are going to exit the year in a much stronger position than what we expected, a few months ago when we did last quarter. At the same point of time, where it's also inflicting is showing up in 75% of our 2027 ARR, guidance that we provided, which is $30+ billion, already booked at this point of time, excluding any potential renewals, greater than 75% of that. So that is where you see that reflecting. From a 2026 perspective, we pretty much remain sold out of our capacity.
Thank you.
Your next question comes from the line of Tal Liani from Bank of America.
Hey,
Tal,
guys.
please go ahead.
You have some people here that's their last quarter of covering the stock, and some people here that's their first quarter of covering the stock. So,
Welcome.
One generation goes, one generation comes.
It's great to have you. Welcome.
I want to ask about the operations. Two things. Number one is your backlog of revenues. What determines the recognition of revenues from it? Is it the completion of data center build out and live traffic going into it? And that means that we're going to have kind of step up in recognition of revenues, like some really good quarters when you finish building out certain capacity. That's the first question. And the second question about gross margin. So gross margin has been going down throughout. I look at the last 5 quarters. We started at 78%, now 68%. And I'm trying to understand the operating structure, how it changes over the next 2 years, let's say. Meaning, what are the drivers for gross margin improvement? I see also technology and infrastructure expenses went up more than revenue growth. So what are the drivers for that to improve? Like, what takes you from the current margin structure to a better margin structure down the road when revenues go up? Thanks.
Yeah. So before we enter into the revenue question that you asked, let me kind of first answer your second question, which is around how we think about the margin dynamic. The margin dynamic in our business is predominantly timing based, not economic. We get receipts of powered shell, and we start incurring lease expenses as well as power expenses at that time. And we start depreciating server and other data center equipments during the fit out process. That process takes us about 1 to 2 months. During that period, we are recognizing costs, but no revenue. That is what costs us new deployments to be running contribution margin during the deployment phase. We've tripled our active power capacity over the last year or so. And what you see in our business is a reflection of that rapid ramp because we deploy capacity ahead of revenue generation by a few weeks. By month 3 in these deployments, we are typically generating revenue and the contribution margins stabilize, normalizing to a ramped contract in about mid-20s. Operating margin inflection also means a gross margin will inflect on time as we inflect into Q2, exiting Q3. That's what will happen through the remainder of the year, and you'll see sequential expansion. To your question on revenue generation, when we deploy capacity and we've tested our GPUs, and when we handed them over to the end customer is when we start recognizing revenue. So as data centers come online and we deploy capacity for our data centers, that is when we start delivering those capacity components over to our end customers on a contractual basis. And then we start recognizing revenue on a straight line basis through the life of the customer contract.
Perfect. Thank you.
Hey, Tal, just one more quick point. When you're thinking about the gross margin, right? remember, we're installing such massive amounts of infrastructure relative to our installed capacity, right? So if you think of it as we're running 50 megawatts and we add 300 megawatts in a quarter, the impact on gross margin is going to be enormous. On the other hand, when you're running 2,000 megawatts and you add 50 megawatts, it's not going to have as material an impact on your gross margin. And when you're watching a company like CoreWeave go through a scaling exercise like we have been on, this journey is unique. And so you're going to have impacts that are short-term in the scaling exercise. But as soon as you become large enough that the ad that you have on a relative basis is more normalized, the margins will immediately reinflate. And when I say that we are achieving escape velocity, that is exactly what I'm talking about. You're talking about a company whose installed base is getting large enough to handle the next incremental unit of compute, the next data hall, the next data center, as they are brought online.
Your next question comes from the line of Amit Daryanani from Evercore. Amit, please go ahead.
Yep. Thanks for taking my question. I have two as well. Maybe Mike, to start with you, you sort of always talked about inferencing as a monetization of AI, and that's how you framed it. I'd love to understand how fast do you think inferencing as a share of your consumed power is growing right now in your install base? And as that keeps growing, what does that really imply for the utilization and contracting economics for the H100s, A100s over the next 12 to 18 months for you?
Yeah, I mean, this is something that we spent a good bit of time thinking about over here. I'm going to answer the question a couple of different ways, right? First of all, when we build infrastructure, we build what we call AI infrastructure. And so it can be used fungibly back and forth across both training and inference. And it is the buyers who have purchased this infrastructure over time that move their workloads back and forth to optimize the use of the compute that we deliver to them. And so we don't know necessarily exactly what compute is being used for inference or what compute is being used for training because it changes all the time. However, we can look at the power draw and extrapolate what we believe to be how much of the compute is being used for inference versus how much is being used for training. And when we do that, we think we are now materially in excess of 50% of our compute is being used for inference. And that is a wonderful thing for a company like CoreWeave because it gives us tremendous confidence that the consumers of our compute are making are driving revenue at their entities because they are able to monetize their investment as they sell their compute and their models onto their clients. With regard for the demand for Hopper and Ampere, I have been pretty steadfast around what I believe is going to be the useful life of this computer. Whether it is the Amperes or the Hoppers or the Blackwells, or ultimately as we move through additional iterations of architecture. And what I have said and what I continue to believe is that the use cases within the AI labs, within the companies that are productizing artificial intelligence are broad, and they require different types of infrastructure to run some of their training loads, and they require different types of infrastructure for some of their inference loads. And so when we talk about contracts, when we do multiple contracts with a counterparty, they come in and they buy the most bleeding edge infrastructure. And then they use that infrastructure to train, and then they take that infrastructure and move it down to the inference load, which is probably less compute intensive. And they bring in new infrastructure of a new generation with which they use to train the next generation of their models. And so we have seen incredible amounts of demand for our H100s, for our H200s, for our A100s. And that is all driven by the fact that there are many different use cases that require different power and scale and pricing of compute. We are sold out in our H100s. We are sold out in our A100s. We are seeing price appreciation as more inference is coming in and making demands upon that compute work loads in order to be able to deliver to their clients. And we think that is an incredibly bullish signal to the space at large.
Perfect. Thanks a lot for that. And I have a really quick one on the component side. One of the other issues I think folks are starting to have is just component availability to build out these data centers. And so as you think about, the 12 to 13 billion in revenues for calendar 26, how much of component procurement is locked in already, be that GPUs or memory or something else for you folks versus you still have to work your way and get those things locked in? Thank you.
Yeah, the overwhelming majority of it is locked in already, right? So for 2026, as we said, we are virtually sold out. But likewise, we have placed our POs, we have secured the infrastructure, we have secured the power and everything else that is necessary for us to execute on delivery on our roadmap. We are very, very comfortable with the guidance that we've given because of having secured that infrastructure and those components already.
Perfect. Thank you, and congrats on a nice set of numbers.
Thank you. Appreciate that.
Your next question comes from the line of Nehal Chokshi from Northland Capital Markets. Nehal, please go ahead.
First, so you brought in an incremental 400 megawatts of contracted power. That's up from 200 megawatts in 4Q25, but below the 600, 700 megawatts per quarter in 2Q and 3Q25. Just, as we think about on a longer term basis, and I know you've already provided the calendar 26 and calendar 27 ARR, but even beyond that, what's kind of like the right way to think about how much incremental power you can bring in each quarter?
So I want to be very clear that the 400 megawatts that we added is incremental and distinct from the 200 that we added prior to that. And so, we enter into contracts for power with data center providers. Our pipeline for additional capacity is extremely large. We're reviewing lots of different sites where we could build infrastructure. We're reviewing lots of different deals that would allow us to continue to our ramp. Another thing that I want to highlight here is, in addition to the transactions that we're doing with third-party data center providers, we are also doing a series of self-build data centers, and that's going to give us additional operational control over our pipeline of data centers, and that's very important to us as we move out through time. So, like I said, we are building our pipeline of infrastructure in coordination with the signals that we are getting from our clients, so that we are able to lease the infrastructure or schedule the self-builds to be able to deliver to it. There's no exact number that I can give you and say, hey, we can get you X number of megawatts per quarter for the next 3 years, but we have a very, very robust pipeline of opportunities that we're looking at. And, like I said, 400 megawatts this quarter. Last quarter was 200 megawatts, but it's been 2 gigawatts in the last 12 months.
Okay, great. So if I may summarize, basically, you expect to be able to match supply to your demand, and demand is off the charts.
That is correct.
Perfect, thank you. All right, second question is that with about $100 billion of revenue backlog, I would say that should translate to about 2 gigawatts that you've now contracted out. And you've contracted in 3.4 gigawatts as of the end of 1Q26. So, roughly, I would say that means that you have about 1.4 gigawatts to go out and allocate. And I use the word allocate purposely because I think you guys are trying to be fair about who gets what capacity. So the question is, A, is the word allocate rather than sell accurate? And B, is the amount to allocate or sell, if you prefer that word, increasing or decreasing relative to a quarter ago?
So I think the word allocate is probably accurate. It's unusual to be in a business where the demand for your product is so high that you get to really be thoughtful about which clients you want to bring onto your infrastructure. Where do you want to support parts of the infrastructure that are being built, whether it's in life sciences and biology, or in foundation labs, or inference products, all of those things. And that is a privileged position, and we are trying to build an ecosystem of clients that we allocate power to, that are going to be the leaders in the space as it continues to grow. You made a comment before that, hey, are you able to coordinate your securing of data center capacity with demand, and demand is off the charts? Like, I don't want to be flip about this, right? Like, the truth of the matter is the limiting factor isn't just power, it's labor, it's memory, it's storage, it's our ability to bring up infrastructure. And so we're really orchestrating the coordination of all of those things so that we're able to deliver infrastructure to our clients, so they can depend upon the quality and scale of the infrastructure that they require to be able to drive their business.
Okay, great. Thank you.
That concludes the Q&A session. I will now turn the call back to Mike for closing remarks. Mike, go ahead.
Thank you. So as we conclude, I want to thank the CoreWeave team and our customers and partners. None of these accomplishments would have been possible without you. I'm incredibly proud of the growth and the execution that CoreWeave has delivered across every part of our company. Our focus, discipline, and commitment to innovation and operational excellence will keep us at the forefront of this revolution. It was truly an amazing quarter, and we look forward to speaking to you guys as we continue to move through the year to update you on our progress. Thank you.
What did you guys think about the CoreWeave call? And how are you taking into account the share price, now down 9.7%, nearly down 10%? I'll start with Neil.
Okay.
Oh, sorry. I'll start with Jose.
Well, first, I want to say the first part felt pretty scripted, just because of you, as you guys heard, the CEO has a very, very bad stuttering, and kind of just like what I'm doing right now, a lot of filler words. So he tends to go very scripted at first. That was like kind of a big complaint when the first part of the earnings call, when the first earnings call actually happened for CoreWeave. It seems like he was not understanding the business, or he just didn't know what he was talking about. But I think it's just kind of that stuttering issue that we've seen pretty much throughout the whole call. So the other thing is, to me, it makes sense. This is a company that grew almost 200 megawatts in active power this quarter. Last quarter, they grew about another 300 megawatts in active power. When you're growing at a phase where it's 20, 30, 40% of your active power in one quarter, that's truly going to impact margins. And I think that was, I think an analyst finally kind of grabbed that during the Q&A session, where this seems to be the bottom. And now once you kind of hit a 1 gigawatt of active power, when you start adding 200 gigawatts, it's still 200 megawatts. It's still a lot, but it's not to like the percentage that it was before. So I'm happy to hear that this is the bottom of kind of their margins, and they're going to see improvements out of that. Then the final thing I would say is just demand is crazy. I personally, I don't care about price action. The story's still the same, if I'm going to be honest. They increased their ARR on the bottom end, which is more important. They also talked a lot about the financing side, which tends to be very boring, but that was a big question for them, right? I think one of the biggest issues for CoreWeave has always been, how are you going to pay for this? How are you going to get the money for this? What's the finance story looking for you? And I do think they need they spend a lot more time on this than some of the other neo cloud players, just because that's one of the biggest questions that gets asked about CoreWeave. So again, they're getting better with financing. The growth is still insane, and the demand is out there.
It was around that comment about ARR. They said for, I think, end of 2027, if I'm correct, the $30 billion mark, they raised up the bottom end of their guidance by $1 billion. That's when it started dropping, if I'm not mistaken.
Can you repeat that, Tanner?
Whenever they were talking about raising 2027 ARR, they raised up the bottom end of that guidance by $1 billion. That's when the stock started dropping, if I'm not mistaken. It was around this point. I'm talking about this movement right here, what Wall Street didn't like.
I wonder if the market was just expecting more, right?
Yeah.
Right. And this is one of those markets where it's really dependent on the infrastructure. If you don't have the infrastructure, you theoretically can't increase your revenue that much, right? It's physically impossible. So I wonder if Wall Street was expecting a bigger jump, but if that's all the capacity that they can build, they can only pretty much make that much revenue. The final thing, and before I pass it to Neil, one thing that I really enjoyed is for their 2027 ARR, which what they mentioned around the $30 billion, they said 75% is already contracted of that $30 billion. And this is excluding any renewal contracts. I would have loved to know if the renewal contracts were there, how much of it is actually available. Like if everybody renews by the time that the end line, are they already 100%? And I think they're probably closer to 100% with that. And I do believe a lot of these players, if we are compute constrained, they are going to renew contracts. So it's insane to kind of already think that they already have more than 3/4 of ARR locked in for next year.
Neil? Muted.
Oh,
okay.
Okay.
Sorry, go ahead.
Look, it is very annoying to listen to an earnings call when a CEO is not the best speaker. Like, not every CEO knows how to handle earnings calls or even interviews. So it makes everything 10 times worse, especially when you're looking at the stock and the stock goes down. But at the end of the day, like what you were saying, this is still a company that is growing at crazy pace. I mean, backlog is $100 billion. The ARR for this year, and by the way, the ARR that they gave us for this year is basically, again, it's the last month multiplied by 12, et cetera, et cetera. So it's basically 2027 revenue, or approximately, which is quite big, because if you do the quick math, the quick math is $4.6 billion per quarter, if that's a number. And today we're half of that, which means another 100% increase from here. It is a business where, yes, right now margins looks like they suck because they always come down, but they explained why this is happening right now. And like Jose said, if this is the lowest point, then great. But if 3 months from now we're here again and it's not the lowest point, I guess it's not great. But yeah, it's down 6% after going up. Oh no, down 10%. Sorry, after going up significantly over the past couple of weeks. And Iron is down from the 20% because they finally released their own earnings report, because it wasn't released for I don't know how long.
It did release somewhere around this point. And the stock was okay. It was kind of dropping, but there must be something on the call, because we're seeing multiple waves of these big sell-offs, and numbers have been out for a while now.
Look, if we're being honest, if you look at their report, it's a very bad report for a company like that. But okay, it's again in the transition of going away from the Bitcoin mining to the AI cloud part. The big green candle had nothing to do with the report. It's only the Nvidia part, but still,
Yeah,
and yes, we had the Iran news, so that's
this was Nvidia. This was Nvidia, but I'm pretty sure somewhere around 5 was whenever the numbers I saw it while the call was starting, and we saw the double miss. But and luckily, Nvidia is a big shield to that. We're also seeing markets in general. It looks like the Iran news might be getting worse now, which is not good. But usually the neoclouds and other, these types of stocks are pretty insulated from that. So do you guys think that this will bounce back at all?
Yeah, I'm honestly shocked that this dropped back to flat after the Nvidia report. I don't care what the story says. Well, maybe I do. I have to listen to the call, but I think getting a validation from Jensen goes a long way in this neocloud space. So I'm really shocked that this has kind of taken a pull back. I'm gonna start looking at the transcript really quick here for Iran to see if what's causing this, because I think the validation, we know they have the contracted power, right? That's the strength that Iran has always had, right? They had the active power. I guess for certain investors like myself, one of the questions was always, what's after that, right? How well are you going to do with the GPUs if you build them up yourself? And I think the clarification here from Nvidia has done that.
Yeah, it's honestly pretty surprising. I think Iran at one point was up like 23-24%, and now we're up 4%. CoreWeave down 9%.
CoreWeave is I think purely margins, because margins were always the fear. Like backlog was always immense, revenue growth was immense. Just how profitable is this business model really? And so far it seems like margins are coming down. Okay, they're building like crazy and adding a lot of active power here, but
could I ask, at least for Nebius, and I remember one of the first quarters that CoreWeave was public, they'd show off their numbers, the stock would crash, and then between the quarters, like whenever they showed off earnings, and I don't know if this was a jump on earnings, but a lot of their movement happened outside of earnings. Like, for example, here, big crash, then later on ended up taking off. Earnings come down, recovers. Earnings come down, it recovers. Now potentially earnings come down. Like, is this what we're going to see from the neoclouds? Because, there
we go.
Because just the amount of spend, the debt levels, all of this stuff is way higher than companies originally anticipate or Wall Street initially anticipates.
Yes,
it's funny. You like what I find with Nebius is like if they chop their capex, the stock would fall. If they end up showing more than 16 to 20 billion as their long-term capex, the stock's going to fall. And if you make any change to what Wall Street's expecting, up or down, stock's going to fall.
Yeah, I mean, I think so, right? Tanner, it's I don't think the market. I think the market is still doubting the neocloud space. Right. And no matter who wins it, I think luckily Nebius has had better reaction after earnings opposed to CoreWeave. I don't think I've had a quarter where CoreWeave does well after earnings.
Mm-hmm.
But they're all in different stories in this AI in this AI structure. I correct me if I'm wrong, but I don't think like anyone's growing their active power on a quarterly basis as CoreWeave does. So for that reason, you definitely see an influx in margins. But you, like all these other players within the neocloud, you kind of group them all together. But each of them are hitting their own niche. They're on their own lane right now. So it's like I think the market is trying to find a correlation with all of them at the same time. When I would personally say with all of them, there's not really much of a correlation because they're all in different phases within this neocloud space, and even the customers that they face are a bit different. So the financial story, the numbers for all of them are gonna look extremely different. So the market is like, wait, but you don't look like Nebius, or you don't look like CoreWeave, or you don't look like Iron. So there must be something wrong with you. I mean, I think that would be my only perception on that, but we'll have to hear your thoughts there.
Yeah, honestly, I was looking at this comment and I'm starting to think, like, for real, what is the IREN Nvidia partnership even saying, if not just for, hey, we can buy into the future? What else did they announce?
I think it was the 5 gigawatt expansion plan on data centers. And like
just a path to be able to purchase those chips.
Yeah, and I think for Nvidia to be willing to sell it to you, because if I can put myself into Jensen's brain for a second, if I'm willing to give chips to somebody, it means that I think they can do something well with those chips. Because the last thing that I want for this AI story, and Jensen, it seems like Jensen, in my opinion, is very focused on the legacy of AI and the innovation of AI. The last thing I want to do if I was Jensen is give chips to someone that I don't think will be able to do much with those chips, because then we're going to hear all these stories of, oh, this person has 5 gigawatts of chips and they don't have no customers, or they have bad reactions to them, or they're not optimizing them correctly. Because I follow Nvidia so closely, I think this confirmation is a lot bigger. It is the bigger news for IREN and kind of what they can do with the chips in the future.
Yeah, I don't know. It's one of those things where I go back to that comment that Jensen said, where he said, if you want 1 chip, we can get that for you. You want 10,000, you want 100,000, you want 1 million chips, we'll sell it to you.
Yeah, so I mean, I see comments like Jensen would sell to anybody if he could. I don't think that's true, because Jensen specifically has told to every hyperscale player, do not give me. He kind of breaks it down where, don't purchase all H100 at once. Don't purchase all H200 at once. Don't purchase all Blackwolf, because this comes in systems. Like you're going to need to buy a little bit here, a little bit there, a little bit the next generation, a little bit the next generation. He's not going to want to sell chips just to sell them. Because of this overcapacity, if there is an overcapacity issue. But that's just me kind of like from my viewpoint of understanding how he thinks, I guess, or how he tries to think. But everybody might have their own thoughts there.
I mean, at the end of the day, they are a $22 billion company. Building data centers, acquiring all of these GPUs takes a lot of money. And like they said on the CoreWeave call, takes a lot of labor, time. It's not like, oh, tomorrow I want a data center, poof, it's built. No, there is a very, very long process. Things can go wrong. You have to work with multiple partners. So it's not like, oh, let me build a data center and it's there tomorrow. Like IREN has been talking about their contracted power of gigawatts for a while now.
Yeah.
But it's been a couple of quarters and they're still at peanuts in AI cloud revenue compared to every other player that we're talking about right here. So, okay, you're getting Nvidia in the conversation, but at the end of the day, when are you going to be showing the real switch from you were a Bitcoin miner, now you're an AI cloud player?
It is a question that I don't have the answer to. And it's...
I also have a crazy theory, and this theory is just crazy, but you guys can tell me that later on. We heard that just 3 months ago, we heard CoreWeave is starting to sell its software solution. They kind of talked a little bit about that during the earnings call, that they're getting traction to all that. So if you have your own GPU cluster, you can actually get their software solution. I personally think somehow Jensen motivated them to do this. And if this is my crazy thinking, IREN, if they don't have the strong software solution, I think CoreWeave and IREN might eventually have a partnership brought by Jensen himself to be able to make sure that these GPUs, because we know IREN is transitioning from that BTC mining to a NeoCloud, is it impossible for there to be a software play there to be able to sell that opportunity from CoreWeave itself?
It is far-fetched, but that would make Jensen very happy, of course. And probably the CoreWeave investors as well. Any thoughts on that, Neil?
Not really, no. Today I was thinking about something else.
What were you thinking about, Neil?
I was thinking about OpenAI and how they should be spending their money, maybe acquiring smaller real companies like I don't know. And I was looking at Snapchat today. And I was like, this company is not worth that much. Like, well, why shouldn't OpenAI acquire something like Snapchat or a Duolingo or whatever, like company that actually generates revenue, maybe some profits as well, and then integrate it in their whole product suite and have a whole ecosystem that runs on the OpenAI models. But yeah, it has nothing to do with data center building like CoreWeave and Iron, but it is what it is.
Really quick, Jensen's on CNBC Live right now. Do you guys want to listen to this?
Go ahead. Put that guy on.
Go ahead. Here, I'm just trying to find the beginning of the thing. All right. Let's have a look. Someone said Tanner always disagrees with Jose. I find I agree with Jose too much. I'm trying to add some sort of spice here.
Go ahead, add the spice.
Yeah.
Last 12 months, big win for my Travel Trust, by the way, for both. Now, let's take a closer look at this partnership with Wendell Weeks, the chairman and CEO of Corning, who's here with us at the New York Stock Exchange, and Jensen Huang, the founder and CEO of Nvidia, who's joining us remotely. Gentlemen, welcome back to Mad Money.
Thanks for having us.
Thank you.
Hey, Jim. Hey, Wendell.
Great to see you guys. Okay, so I want to get right to it, Wendell. Tell me what this investment will do, the partnership with Nvidia. To explain, this is a major, major commitment for you guys. What it will do to be able to help get tenfold optical, that's your number, optical capacity. And what does the tie-up do now that you couldn't do before? You've got a great balance sheet, Wendell.
Well, two things. First, I really thought Jensen said it great on what the purpose of all this is. What he said is about inventing the future of computing with advanced optical technologies. Two, building the foundation of AI infrastructure where intelligence moves at the speed of light. And finally, and both he and I think most importantly, building on the tradition of made in America.
Right, I want to get right to that with Jensen. We're talking about a lot of jobs, great facilities here, and an amazing tie-up. What is the return on investment for Nvidia shareholders and the return on investment for our country?
Well, you know, we're going through the single largest infrastructure build out in human history. Artificial intelligence is going to become fundamental infrastructure all over the world, and surely here in the United States. It is just an incredible joy to partner with the great American company Corning and just an incredible CEO, Wendell. Wendell Weeks, as you know, has really, he grew up in Corning and now he's taking it to the next generation. The partnership is really about inventing a next generation data center where the amount of interconnects, the number of GPUs, the amount of interconnects, the speed of the interconnects, and the scale of the computing is just utterly gigantic. And this is such an extraordinary opportunity because we can use these market dynamics to reinvest, revitalize American manufacturing, the first time in several generations. We can also use this market dynamic, this incredible investment that's coming in from the market to revitalize, to upgrade our energy grid, to bring in sustainable energy. And so simultaneously, we're building a new infrastructure, we're revitalizing American technology and American manufacturing, and we get the opportunity also to revitalize the energy grid. And so all of that is simultaneously happening. And our partnership with Corning here is really about the next generation of our data center architecture, where silicon photonics, optical technology is going to be a very, very big part of it.
Okay, so Wendell, right now, I feel like when I go into a big data center, it's copper. It's copper everywhere. Now, look, copper does good things, but I always think of fiber as next generation. And you taught me that, and your company taught me that. Can you replace all of it, or is it right now just going to start with Connect, and then ultimately maybe the 2 miles of copper that is in a Vera Rubin goes away and it's replaced with what you make?
Well, where we're starting is it's an and. In Jensen's current architecture, we maintain the copper that's within the server rack, and then it's an and as he creates these very large, low latency AI nodes. But you got the right guy on the screen to ask.
Well, I know, look, there's one thing, Jens, I know you can't overnight.
Well, Wendell's got it right. we're going to scale up these systems so incredibly. It's absolutely in. So we're going to scale up copper incredibly. We're going to scale up optical at a scale that, quite frankly, no optical companies have ever enjoyed, which is the reason why Wendell mentioned earlier, we're going to increase the amount of optical capacity in the United States by a factor of 10. It's going to create thousands of jobs. He's going to build brand new factories. We have the privilege of being a shareholder in the company, and I'm really excited about that. And of course, a big part of our commitment to them is a multi-billion-dollar prepayment that wasn't discussed in the press release, but it's something that I'm very happy to do.
All right, so why do you need to do this, Jensen? What are the implications for the ecosystem, and what does Nvidia get that maybe its competitors won't be able to get because of the tie-up?
Well, it's not so much that. It's just that, as we're creating this new AI future and we're building out AI infrastructure all over the world, one of the things that has really happened is we enjoyed the first surge. And of course, everybody realized that NVIDIA is growing incredibly fast. But it's really important that we bring the entire supply chain along with us. We now have the world's largest supply chain. The scale by which we manufacture these AI infrastructure is unlike anything that's ever happened before, which is the reason why NVIDIA is so large today. We also need the support and the partnership of the world's best companies in our supply chain to help us create and realize this future. And silicon photonics and optical technology is a very big part of that, which is the reason why our partnership with Kearney is such an incredible pillar in that. I'm just so pleased with that.
Okay, and Wendell, what would you say to a shareholder who says, listen, why do you need that dilution? You've got, the company's doing so well, 175 years, but young. I mean, everything's been going great. Why do you have to have the partnership?
Well, the partnership is fundamentally about technology and manufacturing here in the U.S. But as it comes to the financial side, as Jensen just shared, they're making a direct sort of multi-billion-dollar investment in the capital that it takes to build these plants. And then also, Jensen wanted to be a long-term investor in Corning. And when someone as smart as Jensen wants to be one of my shareholders, the right answer is yes, please.
Well, look, you've been through the 1983. I remember, you remember 2000. It was just such a tough time. Well, is this in the back of your mind to be sure that it never happens again?
Totally. It is. Totally. So, one of the things about being 175 years old is...
You look younger than that.
I look old. I feel older. So, is that you have to build for the bad times as well as the good. And so when we partner with Nvidia, that is one of the great times where we're going to grow. But as we grow, we want to also make sure we keep the place safe for the generations to come.
Okay, so I do need to ask Jensen. A lot of people are feeling, and you and I have talked about it, but I got to reference it. It's going even louder. The doomers are saying AI is going to kill the jobs. I keep saying what you said, which is that there's been no industrial revolution that we're just many more jobs, with many more times the jobs as before. Could you just refresh the American people that this is not a jobs killer? Ultimately, it's going to be one of the greatest creators in history.
AI is driving the largest infrastructure build out. AI is, of course, market-generated economics coming into our country at a scale nobody's ever seen. It's creating jobs across the entire stack. It's creating jobs at the energy level. All the utilities companies, power generation companies, investing in sustainable energy companies. It's just creating tons of jobs. It's creating jobs at the chips level. For the first time, we have an opportunity to revitalize American manufacturing, bringing in chip plants and chip jobs, packaging plants and packaging jobs, computer manufacturing jobs. And every one of those manufacturing jobs creates 6 other jobs that support them, and not to mention all the AI data centers. This is the first time in history that the amount of manufacturing jobs being simultaneously created across all of these different sectors is growing incredibly fast. Electrician, plumbers, construction workers, their salaries have gone up by some 30%. the number of shortages that we have and the demand for all of these skilled craft experts are just incredibly high. People talked about how AI is going to eliminate software coding jobs because it codes automatically. Absolutely, the latest generation AIs can generate code automatically, but unsurprisingly, the number of software engineering jobs is skyrocketing. Every company is hiring more software engineers. The number of people talked about how new college grads, their jobs will be eliminated by AI.
Right.
Completely false. We're in great demand. Completely wrong. We're in great demand. We see great demand for new college grads who are expert at using AI. And so the most important thing to take away here is that AI is creating jobs. People who are expert in AI are highly sought after. AI is not going to take your job. Someone who is an expert in AI will compete for your job. And so I would recommend that every single layer, from constructions, infrastructure, energy, software company, and all of the startup companies that are being funded right now, this is just creating so many jobs.
Well,
engage AI, get excited about
All
it.
right, so we were out at Amazon earlier this week. Amazon's talking that they want to build out, and Google's building out.
Are
And
you
I got
guys
the sense this
still actively listening, or can we wrap this up?
Whichever. I did want to show something though, if I could after.
Yeah. It's more of the same. I wanted to hear more about the actual partnership than AI job doom and gloom and stuff like this.
So let me share screen. Give me one quick second. So one thing that I and he talked about again is right? And I think that's a very important thing. We keep thinking or when it comes to this solution. And this is a fight between copper and optics, right? Many people think if optics is going to join, it means that copper is going to leave. And kind of Jensen was mentioning, no, I mean, it's an additive. And I think the CEO of Corning also said the same thing. One of the most, I think we're going to see it first is here. So with the Rubin platform, I don't know if you guys can see it clearly. I know it's a little foggy, but in the Rubin platform that's going to come out soon, you have the Oberon rack. And within the Oberon rack, you have the NVL72 and you have the NVL576. Now, for those that are not familiar, the NVL72 is when it's NVIDIA's NVLink solution that you're able to connect 72 GPUs together and make it act as one unified GPU. Right. And this is why NVIDIA is the king of inference, because if you can connect 72 GPUs together and make it seem like one chip, it's super, super important. Now, with the NVL 576, it becomes that, right? When you connect 576 GPUs together and make it seem like one giant GPU. Now, this is, I think, going to completely destroy the kind of performance versus any competitors if you have an NVL 576. But in my opinion, the way to get to this NVL 576 is by connecting, I think is 8 72s. Now, these 72s are all connected to copper to kind of connect these 72 GPUs. We've seen kind of that massive copper spine that NVIDIA has shown numerous times. But to connect these 8 NVL72s, that's going to have optics in between them. And that's when you're going to see kind of the optics grow within this copper solution. And then if you see kind of the Kyber in the future, you kind of go into the NVL 144 and the NVL 1152. So I think overall, copper is going to do amazing and optics is also going to be amazing. And NVIDIA is going to continue to dominate in the overall system because they're able to connect these many GPUs and make it seem as one player. So yeah, I'm pretty excited to hear more about the NVL 576.
TLDR or TL didn't listen. Nvidia to the moon. Jose is happy. We're all going to be making a lot of money. CoreWeave is down. Iron has almost lost all of its gains. Lovely stuff. Software is beating across the board, raising guidance as well. The market doesn't give a damn. This is the most hilarious thing. Like every software name beats across the board. It's always down.
Yeah. I think that is a great place to leave off. IREN investors are 6% richer. CoreWeave investors are 10% poor in the short term. And we will see where we end out tomorrow morning, or 3 months down the line, or 3 years down the line, depending on what your time horizon is.
Rocket Lab also reported. Man, it was a busy evening.
Yeah. Oh yeah. It was one of the busier days.
Rocket Lab. It's up 4%. Lovely.
Just going back through some of the bigger movers today. AAOI is now down 9%. Monster Beverage is up 8%. SoundHound is down 12%. ASYS, Amtech, is up 14%. Toast down 10, Upwork down 18.5%. InnoData up 28%. And
what are those moves? Like 20% in after hours. Datadog up 31% in a day.
People just forgot about software. JFrog is up 18% after being up 6% today because of Datadog.
Okay, maybe software is the play now. Who knows?
Yeah, who knows? All right, that's it from us, ladies and gentlemen. Thank you all so much for watching. Make sure you subscribe to everyone.
Yep. Have a good night.
Have a good night.
Gonna go to my parents to get food tonight.
I hope you're buying.
Is down.
All right, guys. Bye for now.
See ya.
Peace out.